All right. Hello, everybody. Welcome back to the channel. We are here live for Robinhood's Q1 2026 earnings. I am joined with Tanner, Dr. Roy. That's Dr. Roy. Will be here
Yeah.
soon. And we will be covering Robinhood along with a bunch of other stocks. We'll be listening to the call at 5 p.m. But we do have a company that, we've been all three collectively covering for the better part of 2 years now. Tanner, are you excited for Hood?
I am excited for Hood. I wasn't a little bit ago. Whenever they released their March numbers, I'd plugged that in and it looked like Wall Street expectations for earnings were way too high. Now they've come down a lot. Now I'm expecting a beat. So we can go through some of those numbers later on. But it's looking promising that we might see a beat if Wall Street revenue is looking somewhere in the line of like 1.1 billion. But obviously, event contracts were not great this month or this quarter. Crypto obviously was not that great. And so we're heavily relying on, either their net interest revenue or some of their equity and options volume. But it's definitely not a growth month. This is more of a maintain kind of, or quarter, I mean. This is more of a maintaining kind of quarter.
Yeah, I am the same. Obviously, last year the comps were a lot easier. Robinhood had to beat $600 million, and they were coming in with close to $1 billion. They did 989 million Q2 or Q1 of last year. This time they have to beat 989 million, right? So it's a little bit tougher just based on the maturing of the company and the growth rates they still have to put up. So expecting 50, 60% is just a bit tougher. And I agree with you, Tanner. The Wall Street expectations were pretty high a couple of weeks ago. It's now at 1.14 billion on revenue. That number, I believe, was 1.3 a while ago. So, Tanner, are you coming in at that 1.2, which is kind of where I'm coming in, which might give us
I'm at 1.225.
Okay, so that would be a pretty decent beat, even if the growth is like 22% year over year, which is not explosive growth, but it is a beat against expectations.
Yeah, it's smaller than last quarter, up 32% on revenue. I mean, it's still good. Like that's great. But not the 100% doubling of the company in a single year type quarter that we've had back in like the strength of October, November. Like some of those quarters, the amount of options volume that they saw, crypto was spiking. It was sort of an all markets bull market. So a little bit different.
Okay, so you and I have an opinion. I think we should get an opinion from someone who has a doctorate. Yeah. Even if it's not in options, it's just important to like listen to your doctor, right? So ladies and gentlemen, introducing the new Dr. Roy in the house.
Hey, thanks, Amit. I think the last time we've done one of these, I wasn't a doctor at that point. So it's nice to have that behind. Yeah, I'm in line with you guys. Like looking at this earnings, it's going to be good. It's not going to be one of these where we see the 100% year over year. It's just the reality of the businesses, right? It's cyclical. It's less than it was when we were doing Tech Bros Weekly on a normal business or basis. But right now, of course, crypto is doing them no favors. That year over year, that will decline. And even though predictions markets, and that's kind of the wild card here, although we can see some of those numbers from Kalshi and some of the monthly metrics, it's going to be, I think, maybe a 1 or 2% beat on revenue. It's going to become pretty close also on EPS as well. Still nice growth. The nice thing is we're not looking at Robinhood at $150 a share, which would probably be well ahead of itself. But instead, we're in this range where I think it's pretty comfortable. So it'll be interesting to see what the stock price moves at. I do think that when we move beyond crypto winter and we see crypto revenue begin to reaccelerate, probably the last quarter of this year, that's when things could get really exciting again, along with their massive growth levers of international predictions market, Rothera, of course, banking and credit cards as well. So, but this is one of those, it's a fine quarter, but maybe they'll surprise us.
I agree. So the monthly metrics in February were decent, but again, they were down month over month pretty much in every area besides crypto. And then the year over years were good. They were not great. March was a bit of the same. Obviously, March was a pretty tough month for the market. So, that ended up going down a little bit. So the broader question here is, and I'm curious what the chat thinks about this as well. I'll do a pump or dump poll in the chat and what you guys think about this. Do you think there are levers in the business that they have been able to elevate in Q1 outside of trading maybe margin, maybe gold subscribers that is going to get them that extra beat of revenue that maybe the street's being a little too bearish on? Or do you think it ends up coming in line and hopefully the stock just reacts positively towards it?
Yeah, I think mostly in line. Little bit above and beyond, but reality is we have a lot of visibility because of those monthly metrics, like you said. There's some things that we don't know for sure, and I'm sure that we'll hear quite a bit about them. But the reality is, with most Robinhood earnings, we kind of know what we're going to get. So, and analysts do a pretty good job of like, oh, here's the monthly numbers. Let's pull a Tanner, put him in the spreadsheet, calculate it, and boom, there you have it. Although I like Tanner's numbers better than mine. So let's say that Tanner is right again. That'll be great.
Whoever's most bullish, that's usually what people will vote towards. Like, I think Tanner's going to be correct. But I was just going to say, they don't give guidance. I think, we knew the numbers coming into this in terms of trading volume. So I don't think too much is going to beat there. I think what people are really looking to hear is, how are their margins doing on a lot of this growth? What's commentary on potential M&A and expansion into things like Singapore, Canada, stuff like this? That could be really interesting. But I think the stock's going to trade based on Q&A, not based on the numbers themselves. I think the numbers are not going to be too different than what we expect. It's going to be in that 1.1 to 1.2 area. I'm pretty confident in that. Hard to have massive surprises whenever you give people 87 days out of the 90-day period of how much revenue you're making. But yeah.
Yeah, I agree. And similar to the gold subscribers, that could be something where I think they have 90% margins on that $5 a month or something like that. The problem is if the markets were a little in flux in February and March, the appetite for people to be willing to pay for that $5 a month might have also been down a little bit. Now, they had a bunch of incentives here and there in terms of portfolio matches and things of that nature. So really, I think Wall Street knows the numbers. The question is, can they beat to the upside in certain areas? And if they don't, they don't. I mean, this is what happens when a company matures and the company is tied towards the markets. Like, this is not a company with reoccurring predictable revenues. This is a company with predictable revenues rooted in market cycles. And if market cycles are bad, stock may not end up doing that well, which is what we've seen throughout the entire year. Not to mention fintech has been kind of in a bad bucket due to whole private credit quality concerns and things of that nature. So as long-term investors, which I would imagine most of us are, hopefully this is a good quarter, even if it's not a quarter that gets the stock to pump up to the moon.
Yeah, like they're going to continue to build on prediction markets with their joint venture with Susquehanna. We have Robinhood Banking, the credit card products. They're continuing to build towards new products. Those are the things that people need to look towards. The pattern day trading rule is going to change. That's going to potentially be an upside. Agentic trading, there's a lot of really bullish things to look towards for Robinhood. But the overall macro is the tide, right? And if there's less trading volume and markets kind of suck, it's hard fighting against that tide. It's hard outperforming in a market where everyone just has less volume.
Yeah, I'm glad that we're not in a bear market, but yeah, crypto winter for sure. Like I think that all of us knew that at some point we're going to hit a crypto winter in the next couple of years. Here we are, not a huge surprise. I am kind of curious how much, what I want the most visibility on, and I'd love to hear more. And I'm sure that they'll talk about this too. They've given some updates, is specifically on the banking side, how that is going, what that attach rate looks like, the direct deposits. They feature that some, but they get to a certain point close to earnings, and they just don't. They're not, they're in the quiet period. International, you mentioned it, Amit. That's a wild card there. I think that's probably the main thing in that Q&A period, Tanner, where they're going to be focused on, is because Robinhood, like if they're successful with any of these international launches, or even all of them, but just one, then not only is that TAM for them, but it unlocks and basically makes it so it's realized TAM, that they're actually able to cross over into a very different environment than the United States and succeed there. That makes the Robinhood of the future look much, much larger for analysts and others that are covering the name than if it's just constrained to the United States, which would still be a great company. I think that they will, but we don't know how far along they are on that necessarily.
Do you guys have a question prepared?
Not yet.
Dude, none of us ever have a question prepared until
I've got a question.
Okay, what's your question?
I go absolutely last, so I guess one of you guys are going to take it. But mine's just purely on headcount growth and AI automation. How AI is going to affect the actual operations of the business.
Okay, that's fair. If anyone has a good question, you can put it in the chat. Usually we end up thinking a bit right before, but we all three will be asking a question on the Zoom call. The earnings call is happening in California. It's not happening in New York. If it was, I think a couple of us might have made the trip, but it wasn't. It is in California again. So we're gonna get to hear from them in person. The good thing about Hood is, they do it like a real press conference, which is good, right? Whether the results are amazing or not, whether the stock is up or down, like I think Vlad really loves embracing the entire experience and getting up in front of everybody and having to answer hard questions and be accountable. And that's one thing I really love about the company. And hopefully we just get some really decent results here across the board. And also, quite frankly, it's one of those things where people have to know what they're investing in. You can't blame a company for the market going sour if that company is completely tied to the market. Bitcoin being down for the majority of the year, that's not good for their crypto volume. Robinhood can't control that. They can't make Bitcoin go up, but they can build really strong products over the lifetime of the business to be able to capitalize on moments when there is more excitement and sentiment change, and they can build products in the short term for the long term that are completely independent of a Bitcoin going up or down. And I think that's what 2026 is likely going to continue to be as well.
Yeah, the one question that I also have, that maybe I'll go this route as well, is asking about the Trump account specifically. That they're able to back in that, of course, with the Bank of New York, which was a huge announcement, just 2 months ago. I'm kind of curious, both on like that white label UI aspect, if there is perhaps more to come in the future in that, but also like, are these going to be tied specifically to Robinhood metrics? Are we going to see reporting on this, or is this just something that I don't know about the economics of it? Basically, I don't know that they'll give us like complete visibility in that. Maybe they cannot, but I'm curious. I would love to hear. Can't ask this question, or I don't think. I guess we could. I could ask anything, but I doubt that they would be able to respond. Just like how they're able to win that. It was just
real quick before the bell. Who do you guys think is going to have the most upside on their stock out of the companies that are reporting? We got Bloom Energy, Starbucks, Visa, Mondelez.
Yeah, so let me just repeat the list, and the chat can participate here as well. We have Hood, Starbucks, Visa, Enphase, Mondelez, Bloom Energy, Seagate, T-Mobile, Bookings, FICO, Teradyne. Those are the major companies. All three of us will be fighting for the results and try to get them out to everybody. Obviously, once we get Hood, we'll focus a little bit more on that. But I don't know. What do people think? Roy, you have an opinion on which one goes crazy?
I mean, I really like Teradyne. It's been having a little bit of pullback just because the Poet stuff. Of course, what's happening with OpenAI as well. They've been killing it. And if you look at their earnings call previously, there's a lot of acceleration beyond just what the numbers indicate right now. I don't know how it's on a lot of tear. It's up 83% year to date. So I think that there's a chance with Teradyne, but like right now, I don't know. Given what's happened the past few days, the market might just not care and say, "Oh, wrong space, wrong time." If it wasn't for that, I'd say Teradyne, even despite the climb that they've had.
I see Bloom as the biggest one in the chat.
Yeah, it's gonna. Well, I can't say it's going to. I think it's going to be Bloom or Seagate. Like, if you're tied to the AI names, that's your best bet on having such explosive earnings. Same way that Intel did, or any of these other names.
All right, here we go. Robinhood Q1 2026 earnings. We'll be here. We'll be covering it. We got the call in an hour, and we'll be trying to look at all these other companies that report today as the stock market is now closed. All right. Now we wait. Robinhood's usually at 4:05, so give it about 5 minutes, and we'll see what they end up saying. But there's a bunch of other companies, Starbucks, Visa, Enphase, that we're going to be looking at as well and seeing if they can end up catching a bid. Hood closed at 82.19. It got up to 91 or 92 the other day, up from 60 at the absolute lows. So
Enphase is having a little bit of a, oh no, it just erased it all. Little jitters right now.
Yeah, I think Enphase will have its time in the sun, but it might just need to get past midterms or near midterms.
That is also fair. Again, once we get some results, we will get them for you guys. It'll take a couple minutes for a bunch of these names to give us results, but we'll see as soon as we get them in. S&P closed red on the day. Semis ended their streak yesterday. They continue to go red today. A lot of semis ended up coming back, though. They weren't as ugly, but...
Booking holdings. I don't have the numbers just yet. The stock's down 8%, 8.5%.
Bookings beats by 6% on EPS, beats on revenue in line. EPS up 15%, revenue up 16%. Bookings is...
That is not what the stock is saying, bro.
It's a double beat for bookings.
Must have been bad numbers. The stock's down, right, guys?
Oh, my.
Well, gross bookings were down. So the street wanted 54.2. They came in at 53.8. Nights sold, street wanted 341. They came in at 338. So I guess they missed on those two metrics, which ended up hurting the stock. But revenue and EPS, they did beat on. Okay. Bloom Energy, I don't have those numbers yet. Bloom is up a little bit.
Enphase numbers, I think, this is starting to take off. 3.5% right now, up 4%. 6%. Oh, wow. 7.5%. Enphase.
I guess the street likes it. I don't have their numbers either, but that's up. T-Mobile beat by 15% on EPS, 227 versus 197. They beat on revenue. Revenue's up 11%. EPS is down 12% year over year. T-Mobile is
up
flat.
one.
Up one. Sorry, up one. Nothing for Seagate, nothing for Bloom. I don't have the Enphase numbers. Street obviously likes it, but don't see the numbers yet. Don't have Seagate yet. And we don't.
Oh, the anticipation on Bloom Energy is killing me. I'm actually, I got to be honest, I think I'm more excited to see Bloom Energy numbers than I am Robinhood's.
Why?
I just think it's an interesting space, could be extremely explosive, like the guidance. Tells a lot for the AI story. Robinhood, I feel like I already know the numbers.
Right, right.
Yeah. Are you in Bloom?
No, I'm not.
Bloom is a big retail stock, though. I mean, it's up a lot this year. It was up
Robinhood
on last year as well. Are we up?
Robinhood's up 2%.
Okay, a little bit of green. Let's see if we get the numbers in a second. Might still take a minute.
So this earnings season, does it seem like to you guys that there's more than usual of the quick pump and then dump or flush and then rise? Like I know that always that's a factor with earnings, but this one seems even more. Is it just me?
It's not just you. It happened a lot yesterday. It's been happening more often. I think once big tech happens, maybe they'll calm down, but yeah, it's been happening.
We'll see. Maybe it'll happen to big tech tomorrow.
Maybe it'll happen to big tech.
Oh, gosh.
I mean, dude, yesterday it happened. I mean, it happened to Microsoft in the pre-market. Yesterday went to 430 to 404, back to 425. So there's definitely some jitters, but I think it's also because everything's run so much, right?
What's nuts is how much these articles of old information is controlling the markets right now.
Correct.
Yeah.
It's crazy what happened with the Wall Street bets. And there was one not too long ago that said a very similar thing that ended up selling off, I forget which company. But anyway, it was a similar thing of like really old news, and everyone just believed it. Oh, it was the memory. It was Micron and all of them crashing on Google's TurboQuant.
Bloom is up a little, but I don't have the numbers. But it is going up a bit. We've only had T-Mobiles and bookings so far.
Robinhood, huge red candles just came in. Down 3, down 2.5.
Okay, lost 80, lost 79.
Gosh.
The numbers should be in now.
Starbucks up 5%.
Starbucks green. Seagate's getting a pump. Robinhood 1.07. They missed hard.
Oh, bummer.
1.07 versus 1. So this was worse than what the analysts had already revised down for. Revenue,
yeah, way worse.
Revenue's up 15% year over year. EPS also missed by a penny. EPS is up 3% year over year.
Their take rates must have been so much lower. Like, I wonder if crypto just got shot. Like, and I was applying similar takes of what we saw last quarter. And now they've just completely given better pricing to try to just
compete, right?
Yeah, to win customers at all.
Okay, so those two numbers, it's kind of similar to what we all three thought. They wouldn't be the best. They ended up being a bit worse than even the lowest levels some people thought. And that's why the stock's reacting the way that it's reacting. And obviously the monthly data that we've seen over the past couple of months, February, March in particular, were not the best. 78 right there. It could settle around 75, maybe not the worst, but obviously this thing is in free fall. End phase 37, that's green. Starbucks getting a nice pump right there. We'll check that out.
Bloom and Seagate.
No numbers yet. T-Mobile, that is up. Seagate 606, almost 607, now 601. And then Bloom 237, up from 228.
Yeah. Visa, I'm just looking at their numbers here.
Visa got a double beat by 7% on EPS, beat by 4% on revenue, 331 versus 310. EPS is up 20% year over year, beat by 4% on revenue, 11.2 versus 10.7 billion. Seagate beat by 17% on EPS, 410 versus 350. That's up 115% year over year. Revenue 3.1 versus 2.96, beat by 5%. That's up 44% year over year. And then Bloom beat by 238% on EPS. EPS is up 1,367% year over year, 44 cents versus 13 cents. Revenue, 750 million versus 540 expected, beat by 40%. Revenue is up 130% year over year.
Bro, that's why I was more excited to see Bloom than Robinhood. Beat revenue by 39%. That is not easy to do.
Yeah, Bloom deserves the pump right there.
I think they might have a little bit of a Micron. I honestly, well, you could probably even buy now. I think this might be similar to Micron, where the beat was so big that people wanted to hear a little bit more, and the stock sort of waited. Honestly,
that's green,
dude. Bloom is gonna run.
Here's the update on Hood.
Hey, Mel. Robinhood shares about 5% lower in extended trading after missing on both the top and bottom line this quarter. EPS coming in at 38 cents, below the street's 43-cent estimate. Revenue coming in behind consensus at 1.07 billion versus 1.18 billion expected. Trading-based revenue also weaker than expected at 623 million. That's down 20% sequentially. Options, equities, and crypto revenue all missed consensus, with crypto the biggest drag, down 47% year over year. But CFO Shiv Verma telling me the miss wasn't about weak trading activity. He said that trading volumes were healthy and that the shortfall came from lower rebates and take rates on the back end, in part because more active traders.
That's exactly what you said, Tanner. Looks like their rates came down.
Yeah,
even with good volume.
Are using the platform, and those customers typically trade at lower pricing tiers. Management's also pointing to customer deposits as a sign that retail is resilient. Net deposits came in at 18 billion, which Verma called Robinhood's North Star metric. Prediction markets were the bright spot, event contracts hitting a record 8.8 billion, with their revenue segment up 320% from a year ago, but costs, they are moving higher too. Robinhood raising full year outlook for adjusted operating expenses to a range of 2.78 billion to 2.8 billion. Guys?
Okay, so before we go deeper into Hood, Bloom is up 10%. Seagate is pumping. I just want to say something that all three of us have been talking about for the past couple of days. Bloom and Seagate both up 10%. The market is obsessed, and with a good reason, for AI data center infrastructure stocks.
Yeah.
Bloom is in there, even though that has an expensive multiple. Seagate's in there, and their multiple is actually quite healthy. And if they put up the growth and you're part of that thematic, because the whole entire world is spending trillions and trillions of dollars on this stuff, you're going to get a pump. It's just that simple. People would rather pay a higher multiple for something that they know is in the right thematic versus something like fintech or software. We've seen what's happened with the IGV over the past couple months. And so I think that's another headwind, unfortunately, for Hood and a tailwind for Bloom and Seagate.
Yeah, Teradyne also in there. So 3 names reporting that are tied into that narrative.
We don't have Teradyne's numbers yet, right?
I haven't seen them yet. It's up 2%, but that could fade in a second.
Seagate just said, we believe Seagate is entering a new era of structural growth as AI applications amplify data creation and support sustained storage demand. So they're
Wow.
not calling for a boom bust here. They're saying, which of course they'd be saying that, but still, they think that this is going to be a new era for them.
By the way, EPS, third quarter, Street wanted 350. They're coming in at 410, raised on guidance. Adjusted EPS, Street wanted 396. They're saying 480 to 520. Just across the board, these energy / infrastructure plays are beating not only on EPS, revenue, and EBITDA, but they're beating on the guidance for the next quarter decisively. And that's exactly what the Street wants to see.
Yeah, and it was pretty obvious. I think the theme right now is so easy. You're either with Anthropic or you're against Anthropic. And if you're against Anthropic, you lose. And if you're with them, you win. And it's that easy.
Enphase dumped. So, got the pump and then it left. So we'll see what's going on there. Enphase was up 7 or was up 5. Now it's down 2. Bloom, 241. It was at 249. Seagate, again, we talked about that. We also have Mondelez. They beat by 9% on EPS, 67 cents versus 61. On revenue, they beat by 3%. It's up 8% year over year, 10.08 billion versus 9.74. EPS is down 9.4% year over year. Mondelez basically flat after hours. Okay, Robinhood's press release. Let me pull it up and then we'll pull up the deck. We'll see some quotes from Vlad right here. Driven by a relentless product velocity and innovation, Robinhood is increasingly positioned at the center of our customers' financial lives just as we enter the early innings of the great wealth transfer. Said Vlad, CEO of Robinhood. Shiv, CFO. In Q1, customers remain engaged and rapidly adopted new products, leading to a 20% plus annualized net deposit growth, double-digit growth across equities and options, and record volumes for prediction markets, futures, and index options. Q2 is off to a good start in April as equity and option trading volume are on track to be the highest month of the year. And even with tax season, net deposits are approximately $5 billion month to date. That's actually very good. We believe there are massive opportunities ahead as we invest for the long-term, ship products faster than ever to customers and deliver value for shareholders. Okay, let's pull up the deck.
There's quite a large... Go ahead, Roy.
I was going to say, as you're pulling up the deck, a couple of numbers that they mentioned. And of course, 10,000 customers on Robinhood Social, strong early engagement. Banking side is now over 125,000 funded customers. 40% of customers signed up for direct deposit. Of course, they had that partnership to help that follow through actually turn into a reality. Over $2 billion in deposits. And Robinhood Strategies at $1.6 billion under assets, 285,000 funded customers.
So really top level good metrics. It's just, again, it wasn't enough to really move the needle, which is what it seems like for why the stock is down. By the way, NXP Semiconductors, they beat by 16% on EPS, 305 versus 297. Revenue 318 versus 316, beat by 0.63%. Revenue's up 12%, EPS is up 16%. NXP, another semiconductor name, up after hours pretty heavily based on some good growth. Actually, no, it's flat. Wait, am I wrong? NXP. It is, sorry, no, yeah, it's up 9%. So again, there's the trend. Your data center AI names, those are the ones that are moving. Okay, some of these numbers. So again, we'll keep going through the deck, but 4.3 million gold. Some people thought it would come in at 4.7. That's off by quite a bit, which also could have took down expectations, but it is growing nicely. 16% of funded customers are paying $5 a month for gold. Net deposits, 18 billion is actually quite healthy. The largest they've ever had is 20.4 billion. So if they stay at that rate, then that's a good cohort of deposits that will continue coming. Again, options are up 17% year over year. Equities up 54. Crypto's up 43. But last year, those numbers were triple digits across the board. And that's the difference.
Yeah.
Yeah, the market likes growth.
Net revenues, 1.1 billion in Q1. ARPU actually went down. It's probably another reason revenue missed.
So 157. It's the take rate.
It's the take rate. That's correct. Wow.
So just to explain this to people that are trying to figure out what that means as far as take rate. With crypto volume specifically, if you have if you do large volumes as an individual or if it's institutional side, especially institutional side, it's a much lower cost to you as a customer or user, and that's the lower take rate. So in other words, Robinhood has the volume there, but they get a lower amount as a percentage. And in a crypto winter, which we are right now. I know some people call it mini. Some people think we're out of it. I still think we have time to go. The reality is that retail participation in crypto usually goes down by quite a bit. And that's the highest take rate customer that Robinhood has on the crypto platform. So that's what's happening here.
Transaction-based revenues are down quite a bit quarter over quarter. I mean, 623 million. Again, just not that good. Only up 7% year over year. Net interest revenues actually did better, 24% year over year at 359. Credit card looks like it did 32 million, if I'm not wrong, which is actually a substantial increase from where it was before. So credit card is growing nicely. Margin was 193 million. That actually went down Q over Q, not by much. And given March was bad, it's good that it didn't go down too much. But
what happened to securities lending?
It was at 4 million, right? So there was Shiv had an answer for this last quarter. I totally forgot it, but something happened last quarter as well where it was down. It was like much lower than what it should be. It was like
we went from 87 million to 26 million to 4 million.
I forgot his answer. He did have an answer for this.
Okay.
I'm sure he'll address it again on the call, but there's something structural there that's also hurting them on securities lending. They're raising OpEx guidance. We are planning our 2026 adjusted outlook to include planned investments in Trump accounts. So they're raising it from 2.7 to 2.7 to 2.8. They're spending 100 million on these Trump accounts.
Really quick, Seagate's up 12%. Bloom Energy's up 8% right now in after hours. Starbucks up 5%. Fair Isaac Corporation's up 3%. And by the way, Seagate is bleeding out into all the other memory names. Like Micron's up 2, SanDisk is up like.
Okay.
Robinhood's down 7.5%.
Not in the right sector, and it missed its numbers. I mean,
yeah,
both of those put together. Let's take a look at Starbucks real quick, and then we'll get into the other AI names and dig a bit deeper into what's happening with Robinhood. That $100 million investment, I don't know what exactly they're investing $100 million for. I think they'll probably explain maybe the R&D or maybe to develop the infrastructure for the accounts, but there's something they're investing $100 million into for those Trump accounts.
Top and bottom line EPS 50 cents compared to the 43 cents expected. This is the first EPS beat in 5 quarters and just the second if you're going back 10 quarters. Revenue 9.5 billion ahead of expectations of 9.157. The company's CFO saying in the release, we've been clear that top line improvement would come first with earnings growth to follow. Guidance raised for fiscal year 2026 as well. But the big number here, same store sales strong, coming in up 6.2%, well ahead of the 4% expected. It's not evenly spread, though. North America particularly strong, while China stayed a bit flat. The earnings call about to get underway. Remember, this is the company's almost 2 years for the new CEO, Brian Nichols, back to Starbucks turnaround plan. Faster service, simpler menu, driving more traffic, still margins getting tighter in the industry with higher labor costs, rising input costs, and coffee prices as well. But the turnaround plan underway. We'll be sure to listen into the call tonight and see what they have.
This is Seagate.
Earnings per share of $4.10, higher than the street anticipated on revenues of $3.11 billion. Specifically for the guidance, the company really posted a strong EPS guide. This is non-GAAP of $5 a share. I had to do a double take because the street was only anticipating $3.97. Q4 revenue guide also coming in higher at $3.45 billion. Keep in mind, this is a data storage company for AI build out. So it's the picks and shovels. It's really just a duopoly between Western Digital and Seagate. And you can see shares surging on that bullish guide that we're getting from the company. Guys?
Christina, thanks. Christina.
Yeah, it's affecting all the other plays. Micron, Seagate, all of them getting some love here based on these earnings. This is quite incredible. Seagate up 650. Is this an all-time high for Seagate?
Yeah, I think so.
Mm-hmm.
Yeah, all-time highs.
All-time high for Bloom right now as well.
Bloom Energy 250. This stock was $17 in April of last year.
Just a quick 11, 12x.
A little quick 11, 12x. And again, the multiple on it is aggressive for anyone who's looked at it, but no one cares about the multiple when the growth is that substantial and the market's assuming that multiple will easily come down if they keep growing. And they have that massive deal with Oracle, 2.4 gigawatts of capacity. Like, those are very complicated things to do. And if you have the fuel cell technology to get there, and you're one of the only companies that does, then you're going to win. FICO, 1097 the street wanted. They came in at 1250, beat by 14%, year-over-year growth of 60%. FICO's obviously been in a pretty bad drawdown. Revenue, 691 versus 627. That's a 38% year-over-year growth. They beat by 10%. FICO is green, 5% after hours. Okay, so pretty much everything got the run except Enphase and Hood. That's what unfortunately, that's what it seems like.
And Booking Holdings. Booking Holdings down with us, but I think
and Booking, that's also great. Yeah, Booking also didn't get there. Share count was flat, 923 million. They do have more share buybacks to do. GAAP net income, 346 million. Yes, I mean, look at that, dude. Last quarter they did 605 million. This time they did 346. Like, that's a substantial decline quarter over quarter. And year over year, it's nothing. 336 versus 340. Like, there's just not, the growth's just not there this quarter. And we can blame whatever we want to blame, but the point is it's not there. So you can't be too upset at the street. Adjusted EBITDA, 534 million. That is also green. Rule of 40, that went down to 98%, but it obviously still is well above 40. 5 billion in cash, 5.2 billion. They bought 3.1 million shares in Q1. 250 million is what they spent on buying those shares. So if we do some quick math, that would be an average price of about $80 they paid per share.
Yeah, dude, across the board, this is kind of disappointing. Like, the expenses were higher than I expected. The revenue was lower than I expected. The margin's worse than I expected. This was kind of just a big slap in the face.
Yeah, part of the expense is related to the Trump accounts. That 100 million, they said 50 or half would be recognized in Q2. So it's just something to be aware of. They did say it's going to be slightly profitable, that it's contracted based on the cost plus a small margin. So the revenues will be there, but on the front end, it's going to be a drag because it's an operating expense this quarter and next.
Yeah, and once again, I think it's really, really important to reiterate this, and I think we've been saying this for the past couple of weeks. There is a sector that the street loves, and the street hates everything else, and software is the most emblematic of this right now. Fintech has been dead all year. Software has recently started dying because of Anthropic. If you do not absolutely demolish, I mean, ServiceNow, which they didn't demolish earnings, but they put up still some big boy numbers, and they couldn't catch a bid, and they were already down 50%. If you're not in the sector the street cares about and you don't put up numbers, you're going to get crushed. It's just that simple. Like, the market's pretty ruthless about this right now. And, unfortunately, we're seeing that with Hood at the moment.
Yeah, and what is interesting is the guidance for, while they don't do an official guidance, the amount of options contracts that are starting to come back, like, there are parts of their business that's really picking up right now for Q2. So I think that they're going to be talking a lot about this, because it's going to be management's job to try to spin the story in a bullish manner. So I'm curious what they're going to talk about.
Here's Vlad, just posted.
Hey, everyone. We're about to go live for our Q1 2026 earnings call here from our HQ in Menlo Park. Here's a quick preview. First, I'd like to mention a huge milestone in our mission to democratize finance for all: Trump accounts. We're honored to be trusted by the U.S. Department of Treasury alongside BNY, the oldest bank in the U.S. We're serving as the broker and trustee of this program, which will give American children a tax-advantaged brokerage account, with newborns getting a kickstart with $1,000 funded by the U.S. Treasury. Many other corporations and private individuals like Michael and Susan Dell have also made significant commitments to this program. 5 million kids have already signed up, and over 60 million are eligible. The U.S. stock market is the greatest engine of wealth creation in history, and we're honored to play a part to help even more Americans participate. All right. Let's talk about the progress we made in Q1, starting with active traders. And remember, our goal here is simple. Trading on any other platform should feel like a disadvantage. This quarter, we saw double-digit year-over-year growth in equities and options and record engagement across a number of newer products, including prediction markets, futures, index options, and more. And we're not slowing down. We'll be delivering even more for active traders at our Hood Summit this fall. On wallet share, we've continued to add to your financial super app. We started rolling out Robinhood Banking in November, and we've already seen over $2 billion in net deposits from over 125,000 funded customers. Plus, the Gold Card is now in the hands of over 800,000 customers. We announced a whole host of new products that take flight, our event last month in New York, including the Platinum Card and Robinhood for Families. All of these new products have either already rolled out or will be in the coming months.
Let me reload it. I don't know why it's
Real
doing
quick,
that.
well, what he just said there too, he said that they have over 800,000 Robinhood Gold Card holders. They didn't even say that in the thing. They said 765,000. So they have already added, 40+ thousand new members in the last month or so.
X is not working for me.
X has been crap lately.
Okay, I think it's back up. Let's see if this gets there. Okay, let's pull it up.
Already rolled out or will be in the coming months. Finally, the global financial ecosystem. Bitstamp continues to gain market share of institutional trading volumes, and we're shipping new products to our UK and EU customers faster than ever. And just last week, we received in-principle approval from the MA.
That's not my Wi-Fi, guys. That's X. Let's just skip this.
Okay.
I'll get back to it in like 10 minutes. Hopefully it's better. Okay, so what are people thinking about the quarter? Not every quarter is going to be amazing. This is part of being a long-term investor. If you took a trade on Hood at 83, 84, you're probably upset. That comes with the territory when you take an earnings gamble. But, I hate to sound like Trump because I know no one likes when he says this, but I thought the stock market would be down more. This is a bad quarter. I thought we'd be down more. 77, I'll take that. To be honest, let's hold above 75. That's okay. Roy, what are you thinking here?
I would have. It could still fall down more. I've been waiting. Actually, Robinhood's my second largest position, so I'll definitely fill this in my portfolio. But I've been waiting for it to hit 60, and it hasn't done that yet. To actually load up some long dated options, some leaps. I don't know that we'll see that. This isn't bad enough for that. We need macro help to push it down, and I'm not rooting for that by any means. It's my second largest position. A lot of the numbers are really interesting. One thing that I really like is every single quarter, Robinhood breaks out something new as far as like more details, more information.
Yeah.
And I love that. If you look at some of, and you guys cover a ton of companies and earnings, most are not this granular level of detail, which I really like because you have a good understanding of not only from the monthly numbers, what's going on, but also this. There are some questions as far as with the stock lending, I looked real quick and I couldn't find the answer. That's one of those big shifts and changes. Some of this is certainly expected that they talked about in the past when Jason was still the CFO, what they expected hit with every rate cut, just as far as the net interest, specifically the cash sweep side of things. Now, normally you'd see that coincide with a very strong bull market, but the reality is crypto winter is there. I'm not seeing anything that there's nothing that's a thesis breaker at all. Great company, but it's not like a Palantir or a SoFi where every single quarter it's just going to be up and to the right as far as what they're doing for revenue. It's not that type of business. There is a high degree of cyclicality, and when you have the hard comps like they do have, and then you have some weakness from the macro with crypto winter, this is kind of what you expect. So it's not bad. I'm surprised it's not down a little bit more, but yeah.
I'm surprised you put Palantir and SoFi in the same sentence there. But,
they're predictable in the sense that I don't know that we'll ever get a quarter, and I guess you can never say never with either name, where the revenue is down quarter over quarter. Versus Robinhood, you expect that. If you don't, I don't know what you're thinking. Like, not that it's going to happen regularly, but it will happen just because of the cyclical nature of that business.
Yeah, honestly, like you said, I completely agree with you. It's not a thesis breaker. They have more customers than they did before. Those customers are trading more on the platform. You know, they continue to bring on new products, banking, credit cards, and they're showing off a lot of those new products and how they're ticking along. But without a bull market, that growth is going to dry up. Like, it's going to be continuously very hard for them to find new customers if people are not telling their neighbors to, you know, invest in this stock and the stock market's doing very poorly. Then people don't get excited. Although you should buy in red markets, you know, not many new investors do. So,
yeah,
agreed.
I like what I'm seeing.
Yeah, look, the stock also is up from the 60s of the March lows. So I don't know if we retest those levels, but functionally, a miss on all metrics is just not going to be the best in the short term. The question is, if you believe in what is the financial super app thesis, the wealth transfer, like all these other parts of the thesis that are intrinsic to Robinhood, does this really help that thesis or hurt that? I mean, if anything, it helps it substantially. But given we all care about the day-to-day, yeah, on the day-to-day, the stock is down because 15% growth is not what the street is excited about. Especially when
Teradyne stock now down 9%. It's going further, down 10.5.
I'll get those numbers. But yeah, I was going to say when the stock trades at, 30, 35 times forward and you're growing 15%, street doesn't fully love it. X is still not working for me, so I can't pull up results here.
Dude, Teradyne's down 11 and Seagate's up 13.6. That's weird because that is an AI name.
Teradyne, they beat by 21%. Oh my goodness, these numbers are exceptional. Beat by 21% on EPS, 240% year over year. Revenue, they beat by 7%. It's up 87% year over year.
They're down 12.2%. It keeps falling.
It's one of the reasons why I don't play earnings and make earnings bets is because you could be absolutely right on the beats, but wrong on the direction.
Dude, if some of these stocks are the Mag 7, they better put up some big numbers. If not,
well, so like Teradyne is up or was up prior to this 90% over the year.
Well,
so
that's
it's not.
I didn't know that. So that's similar to Amcor and Celestica and Rambus. Like at the end of the day, Roy, thanks for saying that. If you were up 80% going into the print, it's hard for the street to give you more love, right?
Yeah.
And
they're. Go ahead. I was going to say they're a broad automated testing equipment manufacturer. So they're in a bit of everything. But part of this rise also was tied to what was happening with silicon photonics. And as a result, like the love of that has gone off a little bit. It's also impacting air test systems. Has nothing to do with those. It's the poet stuff from the other day, the weirdness.
Yeah, and the thing about air test systems, and again, big congratulations to Roy. He was talking about this in December of last year. Even with the 20% decline over the past couple, it's up 270%. Like, when people say, close your eyes and zoom out, it's like, I know that's cliche and we hate hearing it, but some of these stocks, you literally have to zoom out and be like, okay, that's a blip on a double, almost a triple that it's done in 4 months.
Yeah. And it got like, I would be even saying this as a bull, I'm like, it's ahead of itself. It just is. I've taken profits. The C-suite has taken profits. It's okay to take profits on your runners. So
that is fair. These were Visa's numbers.
A clean beat cross board in its fiscal second quarter. We have adjusted EPS coming in at about $3.31. That is 21 cents ahead of the estimates. On revenue of $11.2 billion, this is also comfortably above expectations. Top line growth was up 17% year over year, the fastest pace in 4 years, helped by continued strength in value-added services. Underneath that, payments volume rose 9%, while the higher margin cross-border volume, which is a key proxy for travel, climbed 12%. Notably, the board is authorizing a fresh $20 billion buyback, bringing their total remaining capacity to roughly $33 billion. Back to you, Melissa.
Thanks.
You know what the run in Bloom and Seagate and Micron and all these names remind me of? It reminds me of Hood last year. 40, 50, 60, 70, 80, 90, 100. I remember, I think all of us remember those every $10 increments because many of us were buying into those $10 increments, you know, even if it was a couple of shares in the 80s or the 90s or the 100s or the 70s after it rebounded from the 30s in April, buying into strength was working for Hood last year for a variety of macro reasons. Right now it's not, but for Seagate, for Micron, for SanDisk, for Bloom, it is working. And maybe that trend changes eventually, but right now the street doesn't care about Micron or, well, Micron's a bad example because they're really cheap on it for it. But like Bloom's price of sales or ARM was returning at 70 times price of sales. Street doesn't care. They just care that these are the winners and we want to allocate to the winners. And I think that's what we're seeing right now.
Did we see monthly actives? Did they show? Yeah, they did. Okay.
Is it
It
down?
actually went up quarter over quarter.
It's up. Okay. Got it. Let me try replaying that Robinhood video. I think we should be able to get it now. Okay, here we go.
UK and EU customers faster than ever. And just last week, we received in-principle approval from the MAS to launch a brokerage offering in Singapore. International is making good progress, and I'm excited to share more at our upcoming crypto event this summer. Altogether, our focus on product velocity drove strong results, including another quarter with a 20% plus annualized net deposit growth rate and double-digit revenue growth compared to a year ago. There's a lot more to cover, so check out our full results at investors.robinhood.com and tune into our earnings live stream on X, YouTube, and in the Robinhood app. See you on the call.
Yeah, this is at least part of the story. You can look crypto notional trading volumes. They break it all out on the Robinhood app. Down 30% sequentially. This is quarter over quarter. Bitstamp down 13%. They break it out into retail, which is a small presence on there. Even institutional is down, although not as much. But remember, this is the lowest take rate. Crypto notional, again, 20% down. And crypto transaction-based revenues as well are down. So it's crypto winter. It's not the entire story of what happened this quarter, but it is a significant chunk. And you're comparing this with a quarter a year ago that was in a very boisterous crypto market. So, this is a cyclical part of their business. It's one of the reasons why they're trying to transition elements of the business to less cyclicality. They always will have an element of this, though.
How do you think of the crypto winter? I know traditionally it would last a full year or maybe 4 months into that. Other people like Tom Lee say that we're going to have a shorter crypto winter this time. Is he just pumping his books, or is there any real information behind that?
I mean, like every time, some crypto bulls say this time is different, and a lot of the bulls, I don't remember if Lee had been one of these or not, said this time is different because of the Genius bill, because there's more adoption, because of stable coins, all these other reasons, institutional adoption, ETFs. There's going to be no more crypto winter. And I laughed at that. I always thought that there would be. I thought it would probably be late this year. It came a little bit earlier than I expected. We didn't have that blow off the top moment that I expected. We're still holding to the 4-year cycle. And if we trace the beginnings of the winter back to October, we well could look at probably, there's several things lining up, I think, for the last quarter of the year to be the beginning of the new crypto bull run. One element is, of course, the traditional length of a crypto winter. If it's not many, and we probably hit the bottom before then, we might have already, although I do think that we have further to go, which is not a great thing for holding Robinhood. You also have midterm elections, and seasonality does also affect crypto as well. Look how it lines up with crypto winter, by the way. You also have September, which usually and historically is something that is not good for crypto at all. So I am actually expecting, and I'll start loading up on crypto names I have not yet, a late summer, depending on, of course, what's happening out there. But that's my plan right now, and I might change my mind based on data. In preparing for that breaking out, probably in late September or October, again, in line with midterm, past the September seasonality, and after the full term of the crypto winter as well. I'm probably not going to hit the bottom, but I don't need to, because crypto bull runs, I mean, they last a good long while with substantially higher upside.
Agreed. Cynthia, thank you. You did not have to send $40 as a sympathy hug, but I appreciate it. I mean, look, at the end of the day, we all have to be adults here. Like, it's not a good quarter. Your stock's down. It is what it is. The only thing I think I can point to is, many of us kind of expected the quarter to, just as Tanner said, 87 of the 90 days in Q1, we got the numbers. We covered it every time it came out on this channel, on Tanner's channel, on Roy's podcast. Like, we knew the numbers weren't the best. So the missing on the revised revision down was quite surprising, like that they couldn't even meet that level.
Yeah.
But we all knew it was going to be not 1.3, 1.4 billion like the street thought in January. It's just this $100 million expense, as Roy mentioned, and the lower take rates. That's what's really, giving them a hard time right here.
I'm going to get the exact take rates here because it was like we had the numbers and it still was worse than expected. But let me see if I can bring up the exact margins.
Go ahead, Tanner.
I was just going to say, I just plugged in the numbers for options contracts. It was much lower. I think actually the lowest, I'm scrolling all the way back. It's the lowest that we've seen since Q4 2023 for options contracts. And now I'll check crypto, which I assume is going to be even worse.
Yeah, my thing for crypto is I don't think the Clarity Act is really going to change the structural problem that crypto is in right now, which I believe is more tied to liquidity and sentiment around interest rates, more so than like digital asset regulation. Would it be a tailwind? Yes. Do I think it's good for Hood? Obviously, but I don't know if the Clarity Act passing is the solution to all the woes around crypto. I hope it is, but I think you need more rate cuts, and that's a question for Q4 of this year if Kevin Warsh is able to deliver them.
Yeah, I think Clarity Act will help some, especially on the institutional side or any institutional facing products. So maybe Bitstamp will see it do quite a bit better. But I don't know that the passing of that is going to be the moment when we start the next crypto rally. Do you guys think it'll pass?
I mean, if it doesn't pass in this administration, when is it going to pass?
Yeah, I think it's going to pass.
I would hope it does. Visa. So I do technically own Visa in the stock draft. So I should be more excited.
Yeah, there you go.
There's my reason to be excited. If anyone has if they see a big headline on Visa or like a core reason. Oh, there it is. 20 billion share buyback plan. We missed that. That'll pump it. I was wondering what was really helping it. It wasn't just the metrics. It was a good beat on EPS, good beat on revenue, but 20 billion in buybacks. That'll help.
Still, their numbers are amazing. Like, the older I get, the more you just realize, like, Visa might be one of the greatest businesses of all time. Like, and that you might seem late to the party, but it still continues to climb.
Yeah, well, they process like trillions of dollars every month, right? I mean, like, it's just one of the most important.
But growing.
Yeah, but growing.
But growing like 17%, year over year. That's insane.
Yeah, good quarter for Visa. This stock year to date, it was getting hurt in February more. Year to date is still now down 5%. It was down 10% coming into the print. So maybe this one can get break even soon. What else do we have? What other big earnings? Canada has approved its first generic version of Novo Nordisk Ozempic, paving the way for cheaper access to the popular diabetes drug. Okay.
Cool.
Your country making progress, Tanner, every day.
Yeah, I know. We just got a sovereign wealth fund.
Dude, you guys are doing
crazy.
That one, if you remember, is funny that Novo Nordisk actually failed to renew their patent for, it's like $200 or something. They were sent a notice. They again didn't renew it, and so now it's public domain, so anybody can actually sell that directly. One of the reasons why people didn't like the leadership of Novo Nordisk is because things like that were happening. So,
yeah, Bitstamp crypto volumes fell, and regular Robinhood crypto app revenue fell like by a lot. We went from
what slide are you on?
Well, it's not a slide. I'm doing it on my spreadsheet, but I can show you here.
Okay, yeah, show us.
I can just share my screen. So we're looking here, Q1. This is old guide stuff. So what we're ended up looking at is the equity take rate was exactly the same as previous quarters. So that's perfectly fine. Options contracts fell from 50 cents to 48 cents. And then this quarter was 44 cents. And then for crypto, we went from 0.6 to 0.51. Makes a big difference. And then even on Bitstamp, we went from 0.04 to 0.035 to 0.031. It's essentially like a, 25% decrease.
What do you think the reason for this was again?
I'm not sure. Maybe pricing dynamics just to see volume. If more people are moving to other platforms, maybe they're doing it to stay competitive. But as Robinhood said, it could be so then they can stay up to date. Here, one quick sec. I just got something at my door. I got to go grab it.
So yeah, it's just what I was showing off before. If you could throw this up real quick and then go back to him. It's this right here. Bitstamp. Let me throw that in here a little bit more. The slowdown across the board. The slowest bit of the slowdown, so the best performer was actually institutional volume on Bitstamp, which has a tiny, tiny take rate, especially compared to retail. And so since other segments, so just on the Robinhood app, 30% down versus 11%, Bitstamp as well, 41% down for retail versus this 11%. The reality is that take rate is going to fall because what Tanner is looking at, it's right and appropriate, but it's an aggregate between the institutional volume, between the wells that do pay a lower take rate, and then retail, which is the highest take rate, but it fell off the most. So that's just the bottom line of what it is.
I think that also speaks to the pricing power that the company's having right now with crypto. Obviously, if the cyclicality of the business is not in the right favor, then they're not going to be able to charge massive take rates, right? Coinbase is like double of Hood. But if Hood wants to get volume, they've got to lower the take rate, which means, the pricing power is not as strong there. Bloom up 13% after hours.
The comment section was right. People said Bloom and Seagate. Oh, that's what it was.
That's what it was. So hold on. So we got 12 minutes until the call. Tanner, I know you bought the dip on this name. Is Micron just going to have one of the best earnings we've ever seen?
I mean, I think so. Yeah.
Okay. So the second question. Okay, the second question is, are you personally buying more at 500?
I've not bought at 500. No, I was buying. I think as high as 450, 460, something like that.
Is there a meaningful difference in your head between 460 or 500, or just for personal reasons you're not?
No, but whenever I got down to like 330 and I was buying, there is a marginal difference between 330 and 500, and maybe I'm having some like hard time increasing my average right now, especially because that boom bust cycle still is a factor. But really, my price target and where Micron's a little bit of a trade for me, and I want to get out at 800. That's what I'm playing it for.
I want to get out at a casual 70% increase from okay, so that's
what I see happening.
Okay, so you think it's a trade for you, but you think this thing pumps to 800. Okay, so theoretically, then 500 to 800, 530, 500, it doesn't matter at that point.
So do you think that the analysts are right that are projecting a pretty substantial revenue fall off in 2 years for Micron? Or is that going to be a kick down the road?
I think it's going to get kicked down the road because I think whenever you look back at the boom that we were expecting for NVIDIA, a lot of people thought that cycle was going to end in 2025. Then they pushed that to 2026. And now people are saying that the CapEx boom is happening all the way through till 2028. New supply, whenever it comes to memory, like it's not... one of the biggest bottlenecks right now is memory, and there's no easy way to create new fabrications.
Yeah.
You essentially need to look out 4 years ahead. So Micron and Samsung and all of these companies needed to have started building back in 2023 in order to get space online for 2027. And that's essentially what happened. And so they were being very conservative before. And so we're not going to get new supply until late 27, if not early 2028. And there's not really going to be any major breakthrough that really hurts margins until early to mid 2030 through 3D RAM.
I think to Roy's question, you've got to assume the can will be kicked down the road. Like obviously the forward multiple is incredibly depressed compared to the growth because of that narrative. But if this cycle is as bullish as we all think it is, and there's not going to be some Google compression algorithm that completely destroys memory, like, yeah, we're going to need a lot more of it for the
I think Sandis is going to put up numbers tomorrow that are going to be very exciting to watch. I'm not a shareholder. I think Micron is the safer, more hedged bet because they do DRAM and NAND, and they're just one of the biggest in the space that you can actually purchase in American markets. But it's my safer yet like still risky, but safer bet of the memory plays.
Yeah, I think it's kind of telling though, like even more so, like outside of just the memory space, what's happening with AI and the demand there. I know it's not for memory since they have their own fabs, but TSMC, their earnings from a few weeks back, where the CEO again reiterated like, hey, we are having to do this CapEx spend. And that is a traditionally incredibly conservative management that he talked about it 2 quarters ago, where he's like, not just talking to his customers, but his customers to make sure that the demand is there, that it's durable, that it's legitimate, that it actually makes sense to do these large CapEx products. And you could tell even like in the earnings call, like he's still like kind of in awe of needing to do this and seeing that the demand is so substantial. When you see conservative management and leadership, and also I know the memory players a little bit less as far as their leadership, when they are saying, hey, the demand is ridiculous and we have no choice but to build, that's meaningful. It's not just hype.
Yeah. TSM's usually very conservative. ASML's usually very conservative. They're all building like crazy because the orders are coming in, and essentially big tech is saying, hey, we promise we're going to be there. We'll protect all your downside. Like even if the contracts are broken, we'll still end up paying for the full costs of what it costs to set up these new fabs. Like there's no downside for these companies because big tech is just paying for everything because the end consumer is paying for all the tokens and they want that growth.
Okay, so a lot of people are asking, so I think we should talk about it. Given this was one fintech's earnings that didn't go the best, SoFi. Roy, what are you thinking for tomorrow?
Yeah, I've heard of them. No, it's third largest position. So yeah, like they're going to put up probably a little bit less than 40% year-over-year revenue growth. I think Tanner and I are pretty similar on that. They have a lot that's going to be fueling that revenue. They've been trading at a little bit of discount because of 2 things that seem to be fading. One was that short report from Muddy Waters, which they were playing wrong. I think they realized that they backed off away from it because they don't want to get sued, and they could be if they continue to know that they're wrong and then double down on stuff anyway. Now, I'm not just saying hey, short and there's a good short opportunity, like just factually wrong. The other is the private credit specifically. That's been something that's weighed on the loan platform business. I think we saw all we need with the new agreements that they had maybe about a month ago, showing that the demand is absolutely there. It's still very durable. And in fact, they might over time, although it won't be right away, benefit from a little bit of diversification from private credit away from some of the SaaS names. Because traditionally about 25% of private credit funds have invested in SaaS just because it's been durable, predictable, seat-based. Now, since that's being disrupted with AI, I think that we might see a little bit more diversification, which might help something like SoFi. Well, also, our Lending Club reported yesterday. I know the stock is just kind of all over the place, but really good, solid numbers. I think qualitatively, I mean, they're different than SoFi, but you can kind of peer in and see what's happening in the space. They had really good numbers, so I think SoFi will do the traditional triple beat. I don't know if the market will care or not. They're not producing memory and chips, so who cares, right?
Yeah, yeah. I'm not sure what the market is going to do, but Lending Club is a much better proxy to understand what SoFi is going to do than Robinhood. There's a lot more overlap in terms of business, and what Lending Club really showed off is that they can grow originations, and there was a ton of market space or marketplace demand for loans to be sold. Essentially, Lending Club's version of the loan platform business. And they said prices were rising, demand was rising. private credit concerns were not a worry for high FICO personal loans. And that's exactly SoFi's business, in an area that Robinhood does not touch. So the best thing that Lending Club showed off this quarter, Robinhood has no impact on, and yet that's also SoFi's biggest thing. So if there's any correlation, it's going to look quite good for SoFi. But maybe, you know, SoFi Invest didn't do well. Maybe their crypto product that they just launched is not going to be super exciting just yet. But those are, like, on a year-over-year basis, they weren't even there. Like crypto is, if you go from zero to a product that maybe does not as good, it's still growth. It wasn't even there before. It's all additive.
Tomorrow morning.
I think it'll be negative on EPS just because the incentives. But I mean, that's when you launch something new. That's like we're seeing it with Trump accounts here with Robinhood. There's an investment initially.
Why will SoFi be negative?
No, not just that the crypto itself, the crypto offerings are probably going to be negative towards EPS, not accretive.
Okay.
It will be accretive towards revenue, just because they've offered very generous incentives just to get some people on that platform. It's more than just, you know, their former crypto offering that they had to diversify or divest from because of the banking license. But that's the reality. Just over the next quarter or two.
A lot of people say that the stock falls on earnings, which it's felt like that a lot. But if you actually go back and you look at the 24 hours post earnings, which there's a couple websites that'll do that for you, we're actually green after earnings, 24 hours after the earnings results have come out, about 60% of the time. So it's a coin toss. So I'm not sure this time. Obviously, we've had a big sell-off from 32 down to 20 going into the earnings.
Yeah, and obviously all the banks crushed it. So, I mean,
yeah,
you know, if we trust in SoFi's underwriting, they will crush it. It will be a question of how the market wants to perceive a crushed earnings. Amcor crushed it yesterday as well, and the market didn't care. But Amcor was up 80%. So I think the good thing for SoFi is because it's down year to date. Theoretically, that would be a reason why the market would be more excited on a big beat. Washington Post just now, the United States will put Donald Trump's face on newly issued passports.
I wish he would come out and say, Robinhood Markets, ticker symbol HOOD, has a great product. Just ask our enemies.
Palantir.
I would love that right now.
Dude, if he could... he could say something about the Trump account. It wouldn't be crazy. Right?
So yeah, that's one of the things is like the Robinhood, like if you look at the unit economics based on what they've said as far as a slide, like there's long-term opportunity, obviously. Like really long-term is those young people mature into full adults so they can have their own account and everything. But like even beyond that, just from the marketing standpoint of like these are the Trump accounts that Robinhood UI is back-ending that, and like we live in a day and era where like the president is tweeting out tickers. It's kind of wild. So I don't. Robinhood doesn't need that. It's a great company, but it's one of those things where maybe it was a factor in why they went this route.
All right, we got about a minute. We are going to hear from Vlad and Shiv. If anyone has any very specific questions, you can put them in the chat, and all three of us will try to see. I think my question might be more about their AI offerings, potentially around their tokenization stuff that was introduced last year. I'm assuming they're going to answer a lot, like securities lending. They're going to answer that during the call. 100 million investment into what exactly that's for. They're probably going to answer that. So should get some of these answers.
Are you, I guess maybe Roy, you're going to be featured on the stream, but for Amit, are you even going to put your camera on, or you think they're going to show
I'm wearing the hoodie. I feel like I got to show it, but
yeah.
No, I'll put my camera. I don't know if last time Roy and I's thing didn't pop. I mean, Tanner's and I's face didn't pop up. So yeah, we'll see this time if it pops up. All right, I think the call is starting. Here we go. Robinhood Q1 2026. You guys will hear us on the call, and we'll be back after the call to analyze it.
Thank you to everyone for joining Robinhood's Q1 2026 earnings call, whether you're tuning into the live stream or here with us in person. With us today are Chairman and CEO Vlad Tenev, CFO Shiv Verma, and VP of Corporate Finance and Investor Relations Chris Cagle. Vlad and Shiv will offer opening remarks and then open the call to Q&A. During the Q&A portion of the call, we will answer questions from the audience, which includes institutional research analysts, finance content creators who may hold an ownership position in Robinhood, and both institutional and retail shareholders. As a reminder, today's call will contain forward-looking statements. Actual results could differ materially from our current expectations, and we may not provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most directly comparable can be found in the earnings presentation. With that, please welcome Vlad and Shiv.
All right. How's everyone doing? I've been told that this may be the first ever outdoor earnings call in history. Can you believe that?
Very cool.
Shiv, they told us before we went public that earnings calls aren't going to be very much fun, that they're going to be a chore, that actually being public wouldn't be very much fun. And I think part of what we're trying to do is improve the branding of being a public company. I think that's going to be pretty important. The branding of it has been very negative, and maybe that's contributing to companies staying private longer and longer, and retail shareholders being left out of all of those potential returns. So yeah, hopefully you guys find this informative and also entertaining, and we can shift the perception of what it means to be a public company slowly but surely. So we're back at our HQ in Menlo Park with a growing audience of in-person folks, shareholders and analysts. So thank you all for being here. Before I get into the meat of it, of Q1, I want to highlight a historic milestone in our mission to democratize finance for all: Trump accounts. Okay, we announced a few weeks ago that Robinhood will be the broker and sole initial trustee for the Trump accounts under the direction of the U.S. Department of the Treasury. And over 5.5 million American children are already signed up. Over 60 million, 60, are eligible. So these children will now experience the power of equity ownership in the U.S. stock market, which we believe is the greatest engine of wealth creation in human history. It's an incredible honor to be trusted by the United States Department of Treasury and to partner with BNY, America's oldest bank, which was appointed as financial agent to manage the program. And by developing and managing the new Trump Accounts app, we're getting Robinhood technology in front of the next generation of investors, 60 million of them. This is also a new way to extend Robinhood's mission beyond just retail and institutional to helping governments and building a public sector business, which we actually see as a big opportunity, and we can really help there. Now, our hope and aspiration is that this should be the best technology product that the government has ever built or been associated with. So we're really excited about this. Now let's get to Q1. So as a reminder, we're focused on a three-part strategy. Number one in active traders, number one in wallet share for the next generation, and of course our long-term mark, number one global financial ecosystem. So active traders, if you're an active trader, we want you to feel like you're at a disadvantage trading anywhere besides Robinhood. So using another brokerage or another financial platform, that should be an irresponsible and irrational decision. That's the goal. So a few things to highlight there. As we continue shipping great products for our customers, in Q1, we saw record levels across prediction markets, futures, index options, shorting, and margin. So our active traders were very active. We saw double-digit year-over-year growth in equity and option volumes as well. So that's been great to see. Now, looking at prediction markets specifically, we're really spending time getting ready for the Q2 launch of our JV with Susquehanna. This is our exchange, Rothera, and that's coming later this quarter. So very excited about that. Now today, Robinhood is the largest retail brokerage firm in prediction markets, and we've been one of the first to adopt the new asset class. Susquehanna is one of the largest market makers. And in the past, up until now, we've been relying on third-party exchanges. With the launch of Rothera, this vertical integration gives us a couple of things. It really gives us end-to-end control of the customer experience, including product selection and pricing. So we'll have more control over what products and what pricing we can offer to customers, which I think is going to be very, very nice. Moving on, Robinhood Social. Strong engagement. We've rolled out Robinhood Social to the first 10,000 customers. And what we're hearing is they absolutely love verified profiles. They love verified returns and trades. So if you remember, the value prop for Robinhood Social, as opposed to other social media platforms or places where you can chat about your finances, is you have a guarantee that customers have actual skin in the game with real positions and real returns. And it seems like that's proving out. People love that. And we're working to add new requested features on a weekly basis. So these are things like live stock charts, expanded personal profiles, tools to find other traders. And we're also bringing popular creators on the platform. And there's really been strong demand from creators to participate in this network. Second, wallet share. We are building our customers' financial super app. We can see that this is starting to resonate with customers. Across retirement, gold credit card, strategies, and banking, customers added 500,000 funded accounts in Q1 and more than 1.5 million in the past year. And so we're really continuing to broaden the offering beyond just brokerage. I'd give a special highlight to Robinhood Banking. So Robinhood Banking grew 5x since the last earnings. It's rapidly become a leading premium digital banking offering. And I think it's really one of a kind in that category. Over 2 billion in net deposits, over 125,000 funded customers, and I think most interestingly, a 40% direct deposit rate. Okay, so that's a 40% direct deposit attach rate, which tells us this isn't just an add-on to your brokerage account for keeping your extra cash. People are thinking about this as a primary bank account. So I think that gets me very excited. I know Shiv as well. Gold Card. Okay, Gold credit cards have also surpassed 800,000 customers with annualized purchase volume, APV, of $15 billion. So this is a heavy purchasing card already. The credit performance continues to be strong, and we're on track to surpass 1 million cards and 100 million ARR this year, and well before the end of the year as well. Demand for the new Platinum card, which if you guys saw the Take Flight event, it was very popular. The card is, I believe, the heaviest credit card on the market. So demand for it has exceeded our expectations. We look forward to rolling out in the coming months. And we're responding to initial feedback. So the great thing about this team, they iterate, and I think you're gonna see a better product than what was even unveiled. So that's very exciting. Moving on to our third and long-term arc, global financial ecosystem. We're making progress as we expand to different markets around the world. International's picking up, and we approach 1 million funded customers. We plan to launch crypto in Canada around mid-year. Remember, this is via our WonderFi acquisition from last year. And we have received in-principle approval from regulators in Singapore to offer a comprehensive suite of brokerage services there. So that's a big deal. Bitstamp continues to win institutional customers, gaining market share. And we're enhancing the offering. In particular, there's been a lot of interest in institutional lending. So you're going to see us digging in and doing more there. Across the entirety of the business, we're really turbocharging Robinhood with AI as well. And if you think about the impact of AI on our business, it's actually 3 different things. So first, we're aggressively leveraging AI to drive efficiency and productivity internally. We've been doing this for a long time, and Shiv will talk a little bit more about the wins we've been seeing there. The second thing, we've been and we continue to give customers access to the highest quality AI-powered tools. So Robinhood Cortex, which we unveiled about a year ago, used by nearly 1 million customers so far. So This is like AI intelligence throughout the Robinhood app. You can see it in the stock digest, and you can now see it in Cortex Assistant, which is our AI assistant within the product. So now that's rolled out actually to all gold customers. And so we're putting the financial intelligence coupled with our market data in your pocket. Customers are using it to do portfolio and P&L analysis. They're using it for stock research and stock screening. And you should expect to see it get better and better. I think we really love what we're seeing there. And we're also, you could tell last December, there was a step change in the agentic capabilities in these AI models. Of course, we're working to bring the frontier capabilities into your product. And we've been spending a lot of time chiseling what an agentic product could look like. So stay tuned there. And third, and this is an interesting one, AI is affecting the markets and investors. So one of the things that we've been spending a lot of time on is empowering customers to participate in the economic value and the upside created by these AI companies. Now, the unfortunate thing has been a lot of them are still private. In some cases, staying private, valuations of hundreds of billions. But Robinhood Ventures was built to solve this. And Robinhood Ventures' first fund, RVI, had its IPO in March. We have a great portfolio of late-stage frontier companies, and we just added OpenAI last week, which was awesome. Now, we're also hearing from customers that they want access to emerging AI companies at an even earlier stage. And we've already begun building the initial portfolio for our next fund, RVII, so the second RVI. We're excited to share more soon, but I think part of this is just building the capability now that we've proven out that private markets democratization is a real thing, making it a bigger thing. And the aspiration is that if you're a founder, retail should be part of the initial seed capital for your company. And I think once we succeed in this, we could actually move the needle on entrepreneurship in this country and make it so that this is better for entrepreneurs. They can access retail and get even more capital. So taking all of this together, the relentless product velocity has driven another quarter of strong business results. Total net revenues grew 15% year over year to 1.1 billion. Net deposits were 18 billion, which is another quarter of 20% plus annualized net deposit growth, and our third highest ever. Gold subscribers, 36% year-over-year growth to a record 4.3 million. And that's 16% attach rate relative to the total customer base and 40% of new customers in Q1. So we're seeing customers adopting Gold very quickly, and that gets us very energized. Now, looking ahead, we've got some great new products to share. So as I mentioned earlier, we've been working hard on extending agentic capabilities into Robinhood Cortex and your Robinhood experience. So you should see some exciting products coming in late May. So that's next month. Plus, we've got a crypto event coming up as well. That's going to be early July in the United Kingdom. We'll be holding, so that's two things coming up very shortly. We're also holding our annual Hood Summit for active traders in the fall. And, you know, I've been reviewing what's on deck for that one, and I think you'll really like that. So why don't I turn it over to Shiv now to discuss our financials, and then we'll circle back for the Q&A.
All right.
Shiv.
Thank you, Vlad. So before we get started on financials, I wanted to share three big takeaways from the Q1. First, as Vlad mentioned, our product velocity continues to accelerate. So we're investing for the long term, we're aggressively leveraging AI across the business, and this is leading products being shipped faster than ever. Second, we delivered another strong quarter of 20% annualized net deposit growth. As a reminder, this is our North Star KPI. It's great to see customers continue to trust us with their assets. Even with the macro backdrop, which was more challenging to start the year, customers remain engaged, they deposit on the platform, and they're rapidly adopting our new products, banking as example, as Vlad mentioned. So all this put together, it led to 15% year-over-year revenue growth and 50% adjusted EBITDA margins. And third, big takeaway is Q2 is off to a good start in April. So trading volumes for equities and options are on track to be our highest month of the year, and actually our second highest month in history. Net deposits, they're already approximately $5 billion month to date. That's great to see. and retirement assets just crossed 30 billion. So really great to see customers continuing to invest for the long term on Robinhood. So let's go to the Q1 results, and all of this is compared to a year ago. So first, revenues grew 15% to 1.07 billion, and this was driven by growth across the entire business. So transaction volumes, they increased with growth in equities and options, and we had a record quarter for both prediction markets and futures. If you look at interest earning assets, they also continue to grow, and they more than offset the lower short-term interest rates. So really great to see net interest margin grow as well. And then other revenues were up as gold subscribers reached a new all-time high, 4.3 million subscribers. So really great to see the adoption there. And we also continue to stay disciplined on our costs. So we managed Q1 expenses to be significantly lower than our outlook. So adjusted OpEx and SBC was 607 million. And this included 14 million of costs related to Rother and Trump accounts that actually were not included in our outlook. So when I looked ahead to the rest of the year, we expect to invest an incremental $100 million into building Trump accounts, with approximately half of these in Q2 as we prepare to launch. As Vlad said, we're super excited for this. So these costs include building an exceptional user experience and actually a brand new app, also ensuring we have best-in-class customer service, and then giving customers access to really great educational context. Importantly, I would also note that our work for Trump accounts is contracted on a cost-plus basis with a small margin. So we expect revenues to exceed costs for this project. So given this $100 million investment in building Trump accounts, we are raising our full year 2026 outlook for adjusted OpEx and SBC by equivalent 100 million, and so our updated range is 2.7 to 2.825 billion. So turning to capital allocation, we spent a lot of time here. We've also leaned in on share repurchases to start the year. So far this year, we've already repurchased over 300 million or 4 million of our shares, which keeps share count on track to be approximately flat this quarter. And as we've said before, the denominator matters. Additionally, in March, our board refreshed our share repurchase authorization to 1.5 billion. So this reflects the great confidence and opportunities we have ahead. So looking ahead, just want to share a few top of minds that we're also thinking about. First, we're going to continue investing for the long term while maintaining our disciplined approach to costs. So customers are responding incredibly well to our new products, and our product velocity, as we said, is faster than ever. We believe this combination can deliver outsized growth for years to come. But at the same time, we want to remain disciplined in the way we invest capital. And so we're continuing to underwrite each investment to strong long-term ROIs. Second, we are also increasing our focus on top of funnel customer growth. So this is something new again. While we continue to add customers organically, we think there is an opportunity to improve our customer growth rate, both in the US and internationally. So we're starting to allocate more of our investments in capital to adding new customers again, while still maintaining our focus on the strong annualized net deposit growth. And this is all in addition to supporting Trump accounts, which also puts the Robinhood technology in front of the next generation of investors. And third, we're leaning into investments in AI, both in the customer-facing products and internally. So Vlad spoke to a lot of the customer efforts, but we also believe making AI native to our workflows is just as fundamental to winning. So last quarter, if you remember, we shared the 9-figure efficiency benefits we've already generated in engineering and customer support. But we are now giving every team the tools and mandate to adopt AI into their daily workflows, to drive productivity while also making the experience of working at Robinhood even better. Today, over 90% of our employees are already using AI tooling in their workflows. That's great to see. And these adoption numbers, they continue to increase weekly. Another example of a data point we watch is commits per engineer. This measures how much code our engineers are successfully deploying into production. It hit a new high in Q1, and it's up 50% since the start of last year, as our engineers are leveraging these AI tools to build even faster for customers. So we believe AI has the power to transform financial services for both customers and employees. And as a technology company, we plan to lead that charge. So putting it all together, we believe the opportunities for 2026 and beyond remain massive. Our teams are hard at work. They're shipping great products for customers, but we're also staying lean and disciplined to generate operating leverage for shareholders. And as I said last quarter, our financial North Star remains the same: maximize earnings per share and free cash flow per share for shareholders over time. So with that, Chris, why don't we go to Q&A?
All right. Thank you, Shiv. For the Q&A session, we'll start by answering shareholder questions from Say Technology. And after the Say questions, we'll turn to live questions from our audience. And then we'll go to dial-in participants. So the first question from Say comes from Sebastian G, who's joining us live via Zoom.
Sebastian.
Hey, good afternoon. Good afternoon, everyone. Thank you, Vlad and Shiv, and thank you to the Robinhood team for the opportunity. Thank you for everything you guys do. My question is around the dividend tracker that you had previously announced. Can you give me an update on the current status of that?
We love our dividend investors at Robinhood. We call them dividend hounds. You're a dividend hound, Sebastian?
I am. I sure am.
Yeah. So the short answer to your question is it's in the works, and we're going to be launching it this year. So on track for that. The reason it hasn't been launched already is that as we sat down with our team to think about what we could be doing even more for our dividend hounds, one thing came up. So a lot of them had this complaint that, some of the other brokerages pay out their dividends in the morning, but we do it in the evening. So why can't we pay out the dividends a little bit earlier, match everyone else? So we looked into this, and what we discovered was that actually the dividend record date is up to 2 to 3 weeks before the dividends are paid out typically. And so we saw an opportunity not just to match what everyone else is doing, but to beat it and to give your dividends an average of 17 days or 2 to 3 weeks earlier. And this is like real value. So one of the other reasons why hopefully it'll be irrational to use another brokerage for your dividend investing than Robinhood. So we got excited about this. We're shipping that. That's live. Should be this month. And now our team is turning their attention to making what at this point, given all the questions, needs to be the world's best dividend tracker. So stay tuned for that and enjoy the early dividends in the meantime.
Looking forward to it. Thank you.
Awesome. All right. The next Say question is from Matt S.
Vlad, what's up?
Hello.
Hey, what's going on? How are you? So excited to be here. Really appreciate it. Okay, so my top voted question was, will Robinhood have IPO access to any of the upcoming mega offerings?
Okay, yeah, that's a great question. So I have to preface it by saying I can't really be specific with you about what IPOs may or may not be on the platform listed before you actually see it. That being said, in the past couple of years, we've seen a distinct shift where pretty much every major IPO of consequence has been on Robinhood's platform. And in most of these cases, the founders, the CEOs are engaging with us directly, asking for help with their retail strategy. And, there's a big change from when we launched IPO Access, which was back in 2021. We really had to claw and scratch and, ask for favors to get retail these allocations. And, everyone was telling them, you don't want retail in your IPOs, certainly don't want more than 10% retail allocation. And now we're starting to get the CEOs talking about how they're actually driving larger and larger historic sized allocations, 20%, 30%. We're starting to get questions about how big is too big. Why isn't anyone doing larger? And I think that's awesome. I think we've helped really change the game, and now retail has a real seat at the table in IPOs. And with Robinhood Ventures, we're driving that even earlier. So I think that's a durable trend. I think it's going to continue. And so you should expect that that'll happen in the future. And we're going to continue to work tirelessly to get the highest quality IPOs and private companies to treat retail as a first-class constituency.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. Now we'll move to Q&A from folks here live in Menlo Park. So the first question goes to Alex Margraf.
Thanks. Hey, guys. Alex Markcraft from KeyBank. Maybe a couple questions, Vlad. Just one on Shiv's comment on customer growth. I mean, the Trump account effort's obviously one source, but as you think about other sources of customer growth when you're putting some more capital behind it, where does your mind go?
Yeah, I mean, I think that there's a lot that we could be doing both on the product side, just making onboarding simpler, getting customers to see the value easier, right? And I think a lot of those surfaces, since we've in the past few years turned our attention more to deepening relationships with customers, getting higher value customers to get more value, we've been spending a little bit less attention and focus on how to make the top of funnel simpler and easier to get through. And in particular, now we have lots of products, right? So there's lots of things to market, lots of things we can put in front of customers. We really have executed on this vision of building a comprehensive financial services platform. So the challenge now is how do we kind of like organize these things for customers and make them so that we deliver the thing that you're looking for as quickly as possible, and not to kind of like clutter the interface and experience. And I think we're also seeing really good impact from our marketing activities. Marketing continues to be very high ROI for us, and that just gives us more and more levers.
Right. Maybe Shiv, on OpEx, last quarter we talked about the profitable growth framework. As you think about the flexibility that showed up in the first quarter around the 607 million, when you look at the rest of the year, maybe help us think about where the flexibility exists to on the lower side, if need be, to ensure that profitable growth framework.
Yeah, great question. So our North Star is still the same. We want to drive free cash flow per share and earnings per share over the long term. So that means we need to be making investments. So we want to keep doing that. Customers responding incredibly well. At the same time, we want to be disciplined. And so we're constantly re-underwriting everything we're doing, making sure it still makes sense and where we want to put our capital. 85 to 90% of our costs are fixed, but a large portion are discretionary. So as a software platform, we're constantly looking at what's the right allocation of resources internally. We also have marketing spend, as Vlad mentioned. We also have some variable costs, even though predominantly fixed. So I feel really good about our outlook. We're still building for the long term. We came in better this quarter and we're continuing to monitor it. But I want us to be investing for the long term. And then if we need to, we also have some levers we can pull.
All right. Thank you, Alex. Now, Alex just had his second child, so we let him have 2 questions. But for the next, for the remainder of the question askers, please limit yourself to 1 question. All right. So the next question is from Dan Fannon.
Thanks, Dan Fannon from Jefferies. So wanted to just talk more broadly about the health of your customer base, given and the resiliency, given all the market volatility we've seen to start the year. And then you gave some comments about April, only mentioned a few asset classes. So maybe expand a bit upon outside of just options and equities, maybe crypto, prediction markets, sec lending, any of the other kind of areas where you're seeing any change in behavior as you go into 2Q versus what we saw in the first quarter.
Yeah, I'm happy to start.
Go for it.
So our North Star KPI is just net deposits. Like that is our customers healthy? Are they trusting us? 18 billion in Q1, despite was a really tough macro backdrop. If you recall, to start the year, there was a government shutdown, a software sell-off, and then a global conflict. Despite all of that, our customers remain resilient. I think the big difference from a couple of years ago is, one, we're a lot more diversified. So there's a lot of different products that customers are using. We mentioned banking, for example, Robinhood credit card. We also have Robinhood strategies. That's our robo-like product that has over $1.5 billion. And so regardless of the macro backdrop, customers are using that. The second thing is we have more active trader tools. So we now have index options, which allows you to go long or short. We also have shorting, which is growing nicely. So for more active traders, they're continuing to remain engaged. On your question on April specifically, really healthy volumes across equities and options, as I mentioned. Prediction markets, it's on track to be around 3 billion and probably our second highest month ever. So really strong engagement there. So everything we're seeing is the customer is healthy, they're engaged, a little bit more activity from the active trader constituency. But the thesis was if you build great products, if you diversify, if you give active traders the tools, they'll be there throughout the cycle. And that's what we've seen thus far.
Great. Thank you, Shiv. Any other questions? Jeff John Roberts.
Hey, Jeff.
Hey, Vlad. Nice setting. My question's on prediction markets. How does Robinhood see this industry evolving? Do you see in 2 years it being like a Uber Lyft type duopoly, or is there going to be like 5 or 10 or 15 players?
Yeah, I mean, remember, prediction markets happens at various layers, right? So right now we're kind of think of us as a brokerage, and then there's a variety of exchanges. And there's there's sort of the main ones that are in the news, and also a lot of the other players are growing their own exchanges, building their own, going through the CFTC registration process. There's probably been over a dozen, probably more than that. So I think we should expect to see some consolidation, because frankly, if you look at all these dozens of new exchanges that are popping up, there's not a lot of differentiation. And I think differentiation really comes down to who has an established, engaged customer base and who has a unique advantage with economics. And one of the things I think we're unique with is we've got 27 million funded accounts in the US. And through our partnership with SIG to launch Rothera, which is one of the leading market makers in the asset class, we believe that we not only have an advantage with retail, but also institutional as well. So I think the asset class is going to continue to grow. We're very, very early. We're starting to see the beginnings of diversification outside of sports. So that's been increasing. I do think, and it's hard to predict the exact timing. I don't believe there will be dozens of DCMs in the future. I think there will be some consolidation, and I think we should see that shaking out in the next couple of years.
All right, thank you, Vlad. Are there any other people here who would like in person to ask a question?
Don't be shy.
No? Okay. Well, then let's go to the Zoom queue. All right, so for those who are joining us on Zoom, please raise your hand to let us know that you'd like to ask a question. So I'm seeing the first question is coming from Devin Ryan at Citizens.
Hey, Vlad. Hey, Shiv. How are you?
Hey, Devin. Doing well, thanks.
Good to see you. Question, I want to dig in on the recent announcement on the pattern day trader elimination and just get your thoughts on what does that mean for Robinhood, for your customers, for kind of modernization and democratization kind of near term? And then, bigger picture, how do you see this playing into, I don't know, themes like agentic trading and maybe the ability for customers to trade a lot more than maybe they otherwise would have been able to do. So just love some thoughts on kind of both near term and longer term, what this means for you.
Yeah, I think it's fantastic. I mean, this rule, so for those of you that aren't familiar, probably most are, but pattern day trading rules prevent day trading effectively for customers that have under $25,000 in their account. So when I say vestigial and kind of outdated, it's this old notion that the amount of money you have in your account or your account balance dictates how sophisticated or knowledgeable you are, right? And we've seen that maybe in the past when we had lack of good information, this was kind of a reasonable proxy, but now we have tons of information, so it makes less sense. Moreover, the way this rule works is if you fall backwards and trip over and become flagged the pattern day trader, effectively, if you want to trade, you would have to churn out of your Robinhood account and go to another brokerage. So it wasn't even, this follows you around as a customer. It's just on a per brokerage basis. And since we were getting the lion's share of new customers, we felt like this disproportionately affected us. So excited to see it go. This, along with the accreditation rules, are kind of like vestigial rules that tie sophistication with account balance, which we think is wrong. And we're excited that there's progress there. And obviously, as you can tell, we're ready to go. The team is excited to go live with the new logic, and I think it's a great step by FINRA to push this through.
All right, thank you, Vlad. The next question is from Dan Dolov from Mizuho.
Hey guys, hey Vlad, hey Shiv. Looks like you're in a much better place than I am.
Is that why you're not on video?
We're I'm in New York. So great stuff here. Everything sounds really amazing and promising. I was very impressed by the agentic trading commentary. Maybe can you educate us a little bit what you guys are doing? Because if anyone's at the forefront of agentic trading, it is probably going to be Robinhood. So I'm really curious to know, what you guys are doing there.
Yeah,
and
yeah,
I'm sure a lot of people would like to hear that as well.
You caught that in my prepared remarks, right? My preference really isn't to reveal too much about products before we ship them, but we've got a lot planned this year. I mean, there's 3 events that I just announced. So we're going to be launching some stuff in May. Then we've got the crypto event in early July. And then we have Hood Summit. That's going to be our active trader event, 3rd annual in the fall. And I just reviewed kind of the docket for that. You can imagine AI agents and putting the best financial intelligence in our customers' hands is going to be a starting player in the starting 5 of most, if not all, of those events. So, and I should say, there's been a lot of noise about this by the industry. I don't think anyone's kind of figured anything out yet. So we're still early, and you should expect us to be not just early, but kind of at the forefront there.
Great. Thank you, Vlad. The next question is from Steven Chubak from Wolf.
Hi, good afternoon, and thanks for taking my questions. Sorry, I said
Steven.
Questions. Chris, to be clear, one question only.
Thank you, Steven.
And this relates to just sec lending in particular, and that has remained under considerable pressure, not just for you, but for industry peers as well. At the same time, the outlook here is pretty constructive given both this large slate of IPOs that are coming, as well as just above normal retail allocations for those IPOs as well. So given that you've had more of your clients opt into fully paid sec lending, was hoping you can contextualize just how meaningful of a windfall this could become. And I'm going to break my own rule. If you could speak to take rate dynamics for 2Q, that would be helpful as well.
Shiv?
Yes, I'm happy to take this one. Great question. So first on securities lending, as a reminder, this will show up in 3 different places in the financials. First is sec lending net. It'll also show up in segregated cash because when customers have securities lending, we get GC collateral back and we reinvestment. Will also show up in margin interest as customers borrow on margin. So when you look at the financials, what you saw is customers continued to opt in and use the program and fully paid. The margin book continued to grow. What you did see is securities lending net, which is primarily based on the rebates rate, was lower. As you mentioned, Steve, that's mainly because lower volatility, lower IPOs in the market. So specials rebates was lower. So that's what brought that down. How do we judge the business internally and its health? There's just 2 main things I look at. 1, are customers opting into fully paid program? And 2, how much assets are opted in? So right now it's about 25% of customers have opted into fully paid and about 50% of assets. So really healthy adoption, but we also have a long way to go. It's hard to predict what's going to happen on the specials rebates rate later in the year, but right now it's at a low. And if the market comes back or if you see IPOs come back, you could see it rebound there. To your second question, we'll answer it even though Chris said limit it to 1. So take rates. As a reminder, this is an output metric. We goal on market share and we're winning, and everything that we see is that the case. What happens to take rates is when active traders trade more, take rates naturally go down because we have tiered pricing. This is a good thing. It means they're engaged, they're using our products, and relative to a few years ago, we're actually seeing a much healthier adoption of active traders during some of these macro events. So what are we seeing to start the quarter? On crypto, it's about 7 basis points lower, and on options, it's about 3 cents. However, we're starting to see that rebound in the pickup of April. So again, it's an output metric. We focus on active traders and market share, and everything we're seeing is super healthy.
Thank you, Shiv, for the doubleheader. All right, the next question is from Ben Budish at Barclays.
Hey, good evening, everyone. Thanks for taking the question. Maybe just tying this into Steve's question on sec lending. Shiv, I'm wondering if you could talk a little bit more about your margin funding. I think it's been a little bit of a source of confusion for investors. You've been moving bank sweep cash over to brokerage cash. I think you've been talking about using some of the sec lending related cash. So maybe just any modeling help you can give us there. How should we think about your future plans given your margin balances are growing more rapidly? Would all be helpful. Thank you.
Yeah, happy to take it. Great question. So on the margin book funding, what you'll notice in Q1 is we moved over $6 billion of cash that was off balance sheet. That was in the sweep program. onto free credit balances onto balance sheet to help fund the margin book. No impact to customers. They get the exact same rate, 335, one of the best in the industry. This was more of a back-end accounting change. It also helps, as you mentioned, on the funding of the margin book. This is very common in different brokerages before. So just with the health of what we're seeing, we decided that was the right time. What would I expect from modeling going forward? They'll stay roughly at this rate. About 25% of our free credit balances today is in this. So 24 billion in sweeps, and then about 6 billion from free credit balances. It might move a little bit around quarter to quarter, but I think that's the way you should look at it. And then most of our free credit balances will continue to be earning the same rate that we do, but this 6 billion will have a smaller take rate, more akin to our sweeps take rate now that it's moved over on balance sheet.
All right. Thank you, Shiv. The next question is from Craig Siegenthaler from Bank of America.
Hey, Vlad, Shiv. I don't know if you can see me, but I obviously can see you, and good to see you both.
We can see you, and you look great.
Great. So I have a follow-up on AI, but not Cortex and not agentic AI, but taking this one step further, where are you in the process of rolling out AI-powered financial advisors? I believe you're working on it. I think you've said before you're in talks with regulators, but can you kind of share a timeline with us?
Yeah, for sure. So I think when people talk about AI-powered financial advisors, they can mean one of two different things. One is just specifically advice on what to invest in, right? And that can be a spectrum of things as well, like trading recommendations and allowing you to build trading strategies with that Reg BI compliant capability. It could also mean like robo-advisor services. So for the latter, we have Robinhood strategies, and for some of the work that we're doing on the agentic side, you should expect that increases in capability as well. And everything that we do, whenever if we do add recommendations, we got to make sure they're in accordance with Reg BI and all of those rules. So we're making progress on those things, and with Robinhood strategies, I think it's the best like deposit money and we invest it for you product out there today under the fiduciary standard. We actually published some returns and historical performance a couple of weeks ago, which looked really good. Now, the other thing people mean when they say financial advice is I want help just managing my entire spectrum of financial things, right? And that involves your banking, your spending and budgeting, your estate planning. And we'll have a solution there for you, multiple solutions. So with Trade PMR, some people still want humans. And I should point out there's a Synergy conference for Trade PMR coming soon where we're going to start unveiling some of the things that we've been working with on the human advisor side. I think that's a durable product. We should expect human advisors to be around because that fills a very, very specific need that I don't think AI is quite going to fill in the near term. Then for the other things, we are working on digital self-serve solutions. We ran a pilot for Concierge where we can do your estate planning, we can do your taxes for you. That's been very successful. And through our self-serve offerings, we also have helped customers with their tax preparation. So we're kind of stitching these things together. And you can imagine as we agentify in more and more of our endpoints, that lowers the activation energy to having Cortex or AI assistant sees everything. But I think first, our strategy is going to be to make the capabilities available on an individual basis and later to kind of stitch them together for you.
All right. Thank you, Vlad. The next question is from James Yarrow at Goldman Sachs.
Hey, good afternoon, guys. Thanks for taking the question. I just wanted to touch a little bit further on crypto. Maybe just any views on when crypto volumes and prices could stabilize at a high level, and perhaps also just the trends you're seeing across your crypto franchise, across client types. And I know you commented on the near-term take rate dynamics in crypto, but maybe just your thoughts on longer term, what your crypto take rate could do over time.
Yeah, maybe I'll hit the outlook and then you can hit the take rate, Shiv. So when we talk about crypto, I think it's important. I want to get away from talking about the price of Bitcoin or all of the other native crypto assets. Our strategy is to take crypto infrastructure and apply it to assets that have real world utility. That's why we care so much about tokenization. And you should expect that this is going to be, I mean, we're at the very beginning of what's going to be a tokenization super cycle. You're starting to see it a little with the stables. You'll see it with stocks as well. And we're going to be at the beginning of that. And I think you should expect that at the crypto event that we're going to have in July, tokenization will be will have a starring role. And I think there's a lot of work to do there, but we're still very, very early. So crypto is two things. It's like Bitcoin and other crypto native assets, which I can't tell you what the price is going to be in 3 months. Price moves up and down. But what I can tell you is crypto as technology infrastructure is going to be big, and we're investing. We've got Robinhood Chain, we've got Robinhood Wallet, we've got our tokenization initiatives. And I think we're still very, very early. So this is going to play out over many years, and you'll see the next phase of what we've been working on in the UK in July.
Yeah, and on the monetization side, a couple things we point you to. First, we are crypto bullish, as Vlad said, but it's less than 20% of our revenue last year, about 18%. So it's an important part of the business, but we've vastly diversified. On the take rate specifically, it's an output metric. It's not something we goal on. What we're seeing is active traders remain on the platform and we're winning market share. And so we're going to continue to invest there. The counterfactual is take rates could be higher, but you wouldn't have as many active traders. And so we don't want to goal on that. As I mentioned, it's a little bit lower in April, but we're already starting to see it rebound. The other thing we're super excited about is institutional. And so we bought Bitstamp last year, the crypto exchange, seeing really healthy market share there. Institutional tends to be more resilient throughout the market cycles, and so we're gaining share there. So everything we're seeing is still healthy, active traders, growing an institutional book. And as Vlad mentioned, we're making big investments in tokenization and on the infrastructure side as well.
All right, thank you, Shiv. All right, the next question is from Patrick Moley at Piper.
Yes, good afternoon. Thanks for taking the question. So Vlad and Shiv, one of the things you guys have done great historically has been in understanding where the puck is going in terms of retail trends, whether that's altcoin trading and Dogecoin or prediction markets here more recently. But I think the biggest story in my mind in retail trading year to date has been in perpetual futures. And I don't know if we've touched on it yet this call. I know you launched crypto perpetual futures in Europe in the fourth quarter. So would love to get your thoughts or just an update on how that rollout's gone, what adoption trends have looked like. And we've seen volumes kind of explode on some of these on-chain venues like Hyperliquid. So Vlad, would love to just get your broader thoughts on perpetuals as a product going forward internationally. And, what are the hurdles to maybe offering that to US customers as well? Thanks.
Yeah, absolutely. The perpetuals product, I'm glad you asked about it, because in Shiv's answer to the last question, I was going to butt in and say, perpetuals overseas have been doing really, really well. And of course, we've listed those on Bitstamp, our exchange, and are making them available to EU customers. And we're seeing healthy growth. The product keeps getting better and better. It's a regulated product, unlike some of the on-chain competition, which means that we can't go quite as high on the leverage that we offer to customers, but customers have been requesting, and we've been increasing that. So yeah, we're doubling down. We've got our perpetuals team is working hard, and we see an opportunity to offer even more to customers. Now, as far as the US goes, we do need some rule changes to offer perpetuals here. The products that some of the other firms have been offering that they've been calling perpetuals are really just long expiry traditional futures contracts. So you don't quite have perpetual contracts in the US. And I think that's actually not an amazing thing thus far, because people have been going to these unregulated offshore entities where there's not as much protection, not as many rules. So yeah, stay tuned. Of course, we're engaging with
the regulators, and we have the ability, since we have this product in the EU, to roll it out in the US as well. And I do think it's an attractive product for active traders. So we'll definitely be on the front lines of any perpetuals expansion or regulatory easings here.
Okay, thank you, Vlad. The next question is from Tanner from Future Investing.
Tanner.
Hey, Vlad. Hey, Shiv. Thanks for having me, guys. My question's on AI and automation. You guys have been early here at Robinhood, but how's this shifted your hiring strategy, and where are you seeing efficiencies or reduced hiring needs across the organization?
Shiv.
Yeah, happy to take this. So a couple things I'll point you to. Last year we said we had $100 million in efficiency, primarily in CX and software engineering. If you look at our volumes last year, they grew about 50%, and hiring and customer service was about flat. And so while we didn't need to reduce any hiring, what we were able to do is absorb all of our volumes through the increased productivity, which is great. What we're doing now is we're just shipping faster. So we're still hiring engineers, we're still growing, but we're using the efficiencies to just keep delivering for products for customers. And so that's where you think the big unlock is going to come. But it's not just engineering, as I mentioned. So everybody across the firm right now is adopting AI. They're using it in their workflows. We're getting AI pilled. It's been incredible to see. And you're going to see that start to go out in many areas. So marketing is a great example. The team just launched some campaigns that were built end to end using entirely AI, which is great. All of the non-developer teams are also using them in their workflows. So for us, I think the biggest thing is we can absorb volumes through AI efficiencies, and we can ship faster for customers across many different vectors.
All right, thank you, Shiv. The next question is from Brian Bedell with Deutsche Bank.
Hey guys, can you see me? Oh,
yes.
Looks like my video's stuck. I don't think my video's working. Okay, can you hear me okay?
Yes.
Yeah, we can hear you.
Yes, all right, great. Good afternoon. Hey, just wanted to just touch on the trading behavior between active and less active traders. So really as you bring in more accounts and the net deposits continue to really perform very well, how are you seeing the customer mix evolve from those new deposits? So what I'm getting at is, to what extent are these more active traders and you're building that book faster than, say, the less active traders? Just thinking about how the different market environments could influence the trading patterns. And then also just on crypto as well, are you seeing a lot of cross currents between those active traders using crypto, or is that really a separate class of traders?
I mean, one of the things that we've been really excited about is the growth in gold attach rate. So remember, the gold attach rate of new customers used to be in the low single digits, and now it's 40%. So 40% of new customers that come in end up adopting gold, and that customer typically then goes into the high yield offering, which is a great value prop for gold. So if you remember, if you have gold, you get interest on your cash on Robinhood with $2.5 million of FDIC protection. You also get interest on your options collateral, which for the active traders is a very, very nice new feature that they've been asking for a while, along with just like dozens of other things, right? You've got the gold credit card, banking is a gold only offering. So we've been, the behavior we've been seeing is someone comes in, a large portion of the time, they try gold, then they start looking at all of the other products that we offer, and we've been really successful in kind of driving that adoption. And trading might not be a daily use case for most people. I mean, some people build up their portfolios, then they kind of trade a little bit less frequently. But some of the other products, like your banking, your credit card, are daily use case product. And I think we have a huge opportunity in the coming months and years to get more and more of our customers into banking and credit. And then we think that, even though the numbers are really good with 800,000 cardholders and 125,000 bank accounts with a 40% direct deposit attach rate, these are still relatively small numbers. And I think we've got a lot of wood to chop to get more and more of our customers on them. So I think that'll be a big tailwind to multi-product adoption over the next year.
Yeah. In terms of where the deposits are coming from, I think the main way to look at it is just broadly diversified. So as Vlad said, it's going into retirement, it's going to ETFs, it's also going to high yield cash, it's also going into trading. So it's one of the benefits of being diversified business. That's one of the ways we had the 18 billion net deposits. It's customers using the platform in a wide variety of ways.
All right. Thank you, Shiv. Thank you, Vlad. The next question is from David Smith at Truist.
Hi, following up on the discussion about banking, could you talk a little bit more about, you know, the extent to which you see this driving new customer growth as opposed to like ARPU expansion, and you know the leverage you see for both there?
Yeah, I think that there is a lot of potential there, and we haven't really tapped it because right now, the way that we've been giving customers banking is we've largely been giving it to gold card customers, and gold card customers the gold cards are largely being driven by existing customers. So the story has really been getting our existing customers to adopt the gold card. Now, I think over the next year, you should see it shifting a little bit more from that to getting new customers on board who come specifically for the gold card and adopt our brokerage and retirement services as an adjunct to doing that. We've run some experiments there, but there's a whole bunch of things that we'll have to do to make that smoother and nicer that I think we're excited about. So yes, big opportunity. It's been really about proving the economics, and we frankly, I think despite the fact that some customers wish they could get the gold card earlier and earlier, if you look at successful credit card rollouts and the speed with which we're rolling out these cards, this is actually right near the top. Like by all objective measures, if you look at card programs that have rolled out faster than us, they've pretty much gotten into trouble, right? So we're right up there with like fast yet responsible rollout. So we haven't been limited by this at this point. But as we approach, as we get into the millions of cardholders, you should expect a little bit more top of funnel with the card and banking, which I think increasingly is going to be part of the same package. I mean, when you think of gold card, you'll think of banking as one and the same.
All right. Thank you, Vlad. The next question is from John Todaro at Needham.
Hey guys, good to see you. Thanks for taking my question. Wondering if we could just go back to Bitstamp for a moment. As you pointed out, it's obviously been quite resilient despite the crypto downturn. You'd mentioned institutional lending earlier on the call. Just wondering if you could expand on that or more cross-sell opportunities within that segment to kind of drive some additional revenue beyond crypto trading.
Yeah, I mean, I would just tell you at the high level. So we closed our acquisition of Bitstamp about a year ago, and one of the first things we did right around our crypto event in the south of France last year was we got together with a lot of our institutional customers for Bitstamp. We had a nice lunch, and it was very eye-opening because I got my notepad out. I was like, tell me, you know, all the things that I need to write down. We're going to deliver them to you in record time to make sure all of your volume happens on Bitstamp. And, you know, I was expecting all these fancy things, but it's like, I just want you to not drop my packets. When I submit an order, I want you to acknowledge. So it's like basic stuff, right? And we just went through, we've been fixing that stuff. Our exchange at first couldn't handle a huge throughput of messages per second. So we were like getting throttled. Things were slow, right? So the engineering team has been doing yeoman's work of fixing all of that. So you're talking about, you know, increases in institutional market share and all of these things. There's just a lot of low-hanging fruit here, which is what makes us so excited about you know, all the things that we're adding. And this is even before the institutional lending desk upgrades, before all the things that we're doing with perpetual futures. So I think we're at the very beginning, and you know, you should expect, you know, telling the customers this, you know, keep giving us the list. We want to earn your institutional business, and I think we've demonstrated that this team can ship.
Yeah, on the institutional lending side, it's actually very simple, as Vlad said. A lot of it's just working capital. So you're not taking credit risk, but a lot of the institutional clients are used to having capital to trade either instantaneously or in working capital needs, whether it's overnight or on the weekends. Given our balance sheet and our technology, we're able to provide that. And so it's another thing that was just a low-hanging fruit that we're seeing really great adoption on, which is another way to monetize, but also grow market share.
All right. Thank you. The next question is from Amit from Amit is Investing.
Hey, Vlad. Hey, Shiv. Congrats on a great quarter, and thank you for taking my question. My question is around international expansion. You guys just got the Singapore license, bought a brokerage in Indonesia. Is the plan to kind of expand through crypto offerings, maybe tokenization, then banking products, different promotions to get customers? Or I guess, can you walk us through how do you think of global expansion going into 2027 and what the strategy is to get customers in these different countries? Thank you, guys.
Yeah, so it's actually both. We want to be everywhere with our core products, and the core products being obviously trading and eventually banking and spending. So in a few markets where it makes sense and there's like well-established regulatory environments that we can follow, we've gone and gotten full licensure. That's the in-principle approval in Singapore. You mentioned Indonesia and obviously the UK as well. I also think tokenization, which what we unveiled in the EU last year was like Robinhood, but with the infrastructure being on chain. So instead of traditional equities, stock tokens, so tokenized stocks. And I think what that'll allow us to do is handle the long tail of if we want to be live in hundreds of countries, the tokenized offering will just be a quicker way to serve those customers. And then we can see where we're getting particular traction and where we're going to need to go deeper with more traditional offerings. And typically what those offerings are is if the jurisdiction has, you know, tax wrappers, for example, that we have to build and very specifically build to. It's the tax wrappers. It's also their local exchanges and market centers. So, you know, if you want to trade some obscure exchange like Kazakhstan securities, which believe it or not, some customers ask for, then we'll have to do local market specific integrations.
Yeah, our simple 2x2 matrix is organic and non-organic brokerage or crypto. If you go through those 4 boxes, we've actually gone through all of them. Some of them we've built organically through brokerage, such as the UK. Some of them we've built organically through crypto, such as the EU, and we've also done acquisitions. To Vlad's point, we want to be everywhere. We're indifferent to which way we go. We're going to look at what's the speed to market and what's the best ROI and how do we have the right to win for customers. And then that's going to be the path for how we choose.
Yeah, and the line between these is going to get increasingly blurred. So even though EU is brokerage first, we have stock tokens, which gives you exposure, equities exposure. So I think you'll see that as a trend too. We'll be getting more and more traditional brokerage assets in tokenized form and delivered to customers around the world.
All right, thank you. The next question is from Ramsey at Cantor.
Hi, guys. Thank you so much for squeezing me in here. I wanted to ask about the Trump accounts again and just get your thoughts on, you know, levels of engagement there, and also the degree to which you might have a plan to, you know, cross-sell or whether you'll be able to sort of cross-sell some of your other products over time into that base.
Look, I think for us, this is really a long-term opportunity. It's an opportunity to be in front of this next generation of customers, and an opportunity to show that, you know, we can be a reliable partner to the U.S. government as they're pursuing initiatives, right? And I think that you know, we're proud to be a part of the program. We're not really spending too much time thinking about how this could be done to benefit us. We're instead focused on, you know, how we can make the best product that the government has ever been associated with. So with our friends over at National Design Studio, I think we're all just super motivated to make sure this is like one of the best financial products we've ever used. And of course, we're proud of our role as the sole initial broker and trustee. We don't take that lightly, and we want to make sure that we deliver the highest possible quality product that we can. We're very proud of what we're going to do. The best, we've got some of our best people working on it, and I believe that good things will follow from us doing this as a business.
All right, thank you, Vlad. The next question is from Ed Engel at Compass Point.
Hi, thanks for taking my question. You mentioned strong April rebounds across equities, options, and prediction markets, but could you give an update on how April crypto volumes are trending relative to the past few months?
Good question. No, didn't give an update on that. I'd say it's probably more of the same. We are really seeing the rebound in equities, options, and as I mentioned, prediction markets around 3 billion, which will probably be our second best month ever. Margin book also continues to grow. Crypto also remains about similar to what it was in Q1 and kind of in that zip code.
All right, thank you, Shiv. The next question is from Michael Cypress at Morgan Stanley.
Hey, good afternoon. Thanks for taking the question. Wanted to ask about API connectivity. Just curious how API connectivity is contributing to Robinhood today. I believe you offer it in crypto. Hoping you could elaborate a bit on your API strategy, key use cases, how you see the opportunity set there emerging on a multi-year view.
Yeah, it's a great question. You know, historically, we haven't really invested too much in API offerings. I think we've been focusing on building first-party experiences that maximally leverage our strengths of like design and user experience. That said, we're interested in API offerings. I think that now that things are shifting in a more agentic direction, like there's a opportunity for us to be differentiated there. We're a low cost provider. We have great infrastructure. We have great APIs that we use internally. And I know there have been a lot of projects out there on GitHub and other things where people kind of attempt to reverse engineer in a unsupported way. So there's obviously demand for it. So stay tuned. You know, when we do release something, we do generally try to make it really, really good. And I think this is an area of opportunity.
All right. The next question comes from Roy from Crossroads. I mean, Dr. Roy from Crossroads.
Thanks, guys. Congratulations on the Trump accounts. I wanted to ask another follow-up question on that as well, and congratulations on that. You note in the earnings slide deck that it's a new way to extend Robinhood's mission to helping governments, that's plural, and I thought that plural was very interesting, to build a public sector business. And so beyond just this, specifically with the short term with the Robinhood partnership with BNY and the Trump accounts, what does that look like as far as that public sector business? Maybe comment on that plural as well. I know you probably can't name individual governments beyond the US.
Right. Yeah. I mean, it's really two things, Roy. You know, one is it's not always easy to be a government subcontractor. And we're learning how to do it, right? It's a first thing for us, but there was a long process to get to this point. And I don't know if a lot of other fintechs have made that leap. You know, it's like as a company that's been around for a little bit more than 10 years, it's a big step for us. So yeah, I mean, we think there's a number of ways that we could help this country. And I think it's going to be important, right? Because there's certainly a lot of disruption coming with AI and with other things. And I think that we're well positioned to sort of help with that. And certainly people's finances are going to be a key part of that. So yeah, there might be other things that we can be helpful with in the US in the future. And also ever since, we've gotten involved with the Trump accounts, we've heard from lots and lots of states, so not even other countries. So it's been states and other countries who just want to do similar things. And our focus has been on, just doing this one thing, but we also recognize that once this is successful, I think that it's going to be something that goes all around the world. And of course, I think that's a big opportunity for us to continue to extend our mission.
All right. Thank you, Vlad. The next question is from Craig Maurer at FT Partners.
Yes, hi. Thanks for taking the question. A lot of my questions have been asked and answered, but I wanted to ask about the flurry of states that are speaking out against prediction markets and their concerns there, and if that tempers your excitement for that product at all.
Yeah, I mean, I would love it if the states didn't have concerns, but it's also not. I mean, it's not irrational, right? This is a jurisdictional dispute. Of course, the CFTC is claiming, and we agree with their standpoint, that these are federally regulated products over which they have jurisdiction. And you know, the states, some of the states have a different view. So you know, we continue to defend our position, and think that it would be strange if the states start exerting jurisdiction over federally regulated CFTC products. And this is something that'll play out in the coming years.
All right. Thank you, Vlad. The next question is from Stock Market News.
I appreciate you guys for allowing me to ask a question here. Congrats, Vlad, Shiv, and the team on a great quarter. I wanted to ask a little bit more about Robinhood Social. And obviously, we got some of the initial people onto that recently. I would like to hear more about updates about how you're thinking about expanding that, and maybe just any findings or updates, and as you guys have launched that. Appreciate it.
Yeah. I mean, people really love engaging with other traders in the Robinhood community. The first rollout was actually to Hood Summit attendees from last fall, which was kind of fun because a lot of the folks had met in person, and we wanted to start it really, really small. And you know, the first pieces of feedback were kind of basic. Like I want to be able to see the posts that people are engaging with at the top rather than it being chronological. Things like that, or I want to see who the other traders are that people are engaging with. So the team has really been shipping on a weekly basis. You've seen us knock out more and more things and extend the rollout. And we've extended it to other asset classes as well. So you can see the prediction market trades are on there, as well as equities and options trades. And there's a really nice experience that we've built that allows you to trade via the posts as well. So yeah, you should expect that to approach general availability in the coming months. We like what we're seeing there. There's obviously a ton to do before this becomes like the world's leading financial and business social media product, but that's the aspiration. We think we have some advantages there with the verification, and people really, really care about it in this domain. So plenty more to come.
Great.
And getting creators on it. So stay tuned for that.
Great. Thank you, Vlad. So that concludes the Zoom queue. Is there anybody else in the audience who's been waiting after we worked through the Zoom queue to ask any more questions? No? Okay, well then, Vlad, I will turn it over to you to end the first outdoor earnings call possibly in history.
Where's the Guinness Book of World Records? To invite them to our stuff. Thank you guys very much. Look, I hope you can tell from the presentation, we do a good job we tried to convey this, but we've got a team that's working incredibly hard. The roadmap there's incredibly full. There's always more to do. And yeah, we're just incredibly motivated to keep shipping for our customers and for all of you. So thank you for being with us on the journey, and see you next quarter and at our product events in the coming months. So cheers, appreciate it. And thank you, Shiv.
Thank you.
Okay. Cool. Well, that is Hood's Q1 26 call. Let's start with you, Tanner. Thoughts on the answers to a bunch of those questions?
I thought it was good. I mean, like, I think Robinhood's doing what Robinhood does best. They're focused on product and design, and they can't control too much of the actual volume that comes in. And what they're doing with Trump accounts, I actually think is what I would want them to do, where they're doing something that I think is purpose driven and not just profit driven. They're trying to create something great for the country. And I actually think long term, the companies that do this stand to benefit the most, even though today it probably has a larger negative impact on expenses than it does immediately bring in profit. So I can't help but love Robinhood's mindset, the way that they think about things, the long-term mindset. It's what made me love them in a bull market, and it's what, you know, protected in my portfolio in a bear market. And it's not a bear, like I'm fully aware that people are pointing to, you know, the market being at all-time highs. But let's not forget, that's not the quarter that they're reporting on. We're not reporting in this mid-April period. This is from January, February, and March, where traffic was much, much lower, and there was a sell-off in most retail, like tech-based names. So that's the sort of bear market commentary that I was referring to. But I'm fully aware it wasn't actually a bear market. I just mean worse macro.
Roy?
Yeah, it's I don't think you can say it was a good quarter. It was okay. You know, it's a little bit weaker than we expected. We didn't expect like a blockbuster, and that's why the stock was trading where it was. Yeah, it's interesting to see it fall about 10% what we were expecting based on the results. And you know, it's going to be volatile, but I think at least for me, I'm just going to call it as I see it. Like the Robinhood stock, you never know for sure, and a lot of it does depend on what's happening in the crypto space, just because it's heavily tied towards that, even more so than the actual trading volume. The revenue that they get from it is correlated. But I think for the next 3 to 6 months, it's probably not going to like really rocket or take off into triple digits. I do think in the later half of the year, and of course things can change with announcements. They do events very well. They do launches very well as well. But I think that's just kind of the reality. I do think in the fourth quarter and next year that it's a great opportunity in Robinhood, and I'll probably add some according. I'll just continue to hold what I have because I'm a long-term investor, and I know that it's cyclical. I did though really like, and I was actually surprised by. I appreciate the color on it. The answer to my question regarding the plural of governments there and that opportunity. You know, it's not just that they're like, well, you know, there's potential opportunities out there. It's like they're having conversations with states at this point. And it's going to be really interesting just to see if that's what the Trump accounts serve as. Is like, of course, there's prestige attached to it. It's slightly accretive, even though it's not like a high margin type of thing. And on the short term, there is a cost to it just because you got to pay that upfront to develop the product. But long term, if this ends up being a proof of concept where, okay, we've done Trump accounts for the most significant financial player in the world, which is the United States government. And then that translates a lot easier to opportunities at the state level and other governmental levels as well. So it's very intriguing. That's not short term. I don't think the market's going to pay for that premium, but it's just interesting how Robinhood seems to always be able to expand their TAM. Of course, there are things that can surprise us. Rothera is one of those that they mentioned launching here in Q2, which, I mean, we're pretty close to the end of Q2, so that's very soon. That will be accretive, and it'll be very interesting to see what that looks like. But yeah, overall, okay quarter. Nothing special for Robinhood. And long term, though, I still think it's a fantastic company, a fantastic investment. Just short term, it is what it is.
Yeah, I agree with both of you. I think the big thing here is just it's not in the right thematic for the market right now. And, you know, there's a reason Bloom is up. They beat by 200%. There's a reason Seagate is up. Like, those are just like, it's just so obvious that the names that are running right now, or even have a chance to run, are the names that are putting up the same types of earnings that Robinhood did last year at this time. And last year, we were not in this massive semiconductor CapEx driven tailwind. Like, it was there, but now you're seeing all the derivative companies, energy, land, power, all of them coming together. The bottlenecks really start to put up the big numbers. And as a result of that, you know, that's where the street wants to be, because the street wants to be where growth is, and 15% growth for Hood is just not massive growth. So I think, once again, it's one of those dichotomies of, if your average cost basis is $80 because you just bought in, or $75, you're annoyed. A lot of people here don't have that cost basis. They have a cost basis that is well below that. And if you do, I mean, it's one of those things where either the opportunity cost of seeing a Micron potentially go to 700 in the coming weeks is too much for your emotions to handle. Therefore, you get rid of your $20 cost basis hood, $30, $40 cost basis hood, and get out of it to chase that. Or you become a long-term investor, which is what I think the majority of us at least attempt to do on certain names. Other names we trade, other names, we genuinely want it to be a cornerstone of our portfolio over the next decade. And you let the company do its thing, which is not going to have a great quarter every single time, or even a great year every single year. But at the end of the day, if it's a phenomenal company, it eventually will compound. And I think this is just one of those potential years where Hood is going through a transition phase, not necessarily where they're putting a massive growth. Because objectively, 15% growth is not the type of growth we're accustomed to. And, the market is appropriately not rewarding that.
Yeah. The other thing to note is, as far as these quarterly comps, what's coming up, quarter two is not really that much different from quarter one. They'll be fine. They'll show growth. They'll show higher numbers in this too, barring something strange. Quarter three and quarter four, that's going to be something that probably a lot of people have focus on. We had the same questions, though, to be honest, going into quarter four of 2024. Of course, two things benefited them. We were in that full late stage of the crypto cycle, and then predictions market as well. So I think, short term, there are some questions as far as what this growth looks like, just like you said. Long term, great company as well. But yeah, the market on a short term basis tends to trade more on a narrative than it does the actual numbers, but the numbers are just okay.
The moral of the story is Seagate's up 16% and Bloom Energy's up 11.5%.
Yep.
AI, baby.
It's AI right now. That's what it is. And, SoFi's tomorrow. I'm really hoping they crush it. But once again, let's say they do crush it, which they're probably going to have better numbers than Hood. I don't think they're going to have a double miss. And if their stock doesn't react, I don't think we can blame Noto. We unless the company actually messes up here. I mean, here you might be able to blame management a little bit because they had a double miss. But even though you can explain it with the Trump accounts and all this stuff. But if Noto crushes it and the stock doesn't go up because people want to buy Bloom Energy tomorrow in the pre-market over SoFi, then it is what it is, right?
Yeah. It's tomorrow. While SoFi is going to be a big, name for us, like after hours is what everyone's going to be paying attention to. CapEx spend on big tech. It's going to dwarf everything else. And hopefully NVIDIA runs on that news if it's increased. And this is why you don't go all in on one name and you diversify across a couple different themes, because sometimes one will run when the other one takes a breather, and then the bull market will be roaring back, and Robinhood will do well, and the originations from SoFi will do well, and you'll see new highs once again. And everyone says they don't come, or everyone, whenever they're not there, they say they won't come, and they say their end of year targets are a lot of recency bias whenever people give price targets. But
yes.
The sun will shine again on fintech names, just not right now.
Yeah, and again, it is the nature of investing. Given how hyper focused we are on every single stock in the market, there's always a shiny new object that you're not in that's running that makes you hate the object that you're in. But then it begs the question: did you care about that object before it ran, and were you willing to sell and potentially incur capital gain taxes and buy something that was already up 80% going into the print? And then if it bumps another 20%, you feel upset. But it's like, were you really willing to go? Like when Micron, are people really willing to go into Micron when Intel was at 67, up 80% year to date? Were you really willing to buy Intel at 60? It seems obvious after it pumps, obviously.
Yeah,
but it's hard.
Yeah,
before, and it's
some of those are really hard. Before, like AMD and Intel felt obvious in hindsight. I know that sounds crazy. Like, of course, that sounds silly, but then there's other things that you want to take bets on, and potentially you do, and then things fall apart pretty quickly. So then you kind of get this this worry sometimes that what you think is going to happen may not, and you're maybe potentially missing some red flags.
Yeah, and the other thing is you can't own everything, right? So if you bought Hood for the past couple of years and you have a great position that is volatile or is not doing that well this year compared to other assets, the question is, do you want to get out of it and get into something else? Those are really personal decisions, but I don't think people should have that much fear or pain or FOMO on everything else that's running if you are in a position that you deeply believe in for the long term, even if it is not performing in the short term. And every name has up and down quarters. That's just the nature of the markets. You can't be investing in individual stocks if you're not ready for a 9% dip after hours, after the stock has compounded more than 10x over the past 2.5 years.
Yeah.
And, Bloom was down 12% today, even on those numbers. People would say, well, the thing got way too expensive. Now it's like, well, the earnings were just, the narrative will flip with the price action.
Yeah, it was obvious regardless, up or down. It was obviously expensive, and it's obviously the name to help with the energy.
Like case in point, Teradyne reported it's great numbers, and it's down like almost 10%.
Yeah, that doesn't make sense to me.
Yeah, it's you sometimes can't predict these things. So yeah.
The way that I don't know Teradyne very well, but the way I think of them is like their air test systems big brother.
Yes, that's the way to think about it.
That's good enough.
Yeah.
Perfect.
All right, that's what we got today. Tomorrow's gonna be a big day. Roy, are you streaming SoFi tomorrow or no?
Yes, yeah, with Tanner and Tevis.
And
okay,
Neil.
so those three will be live at like 6:55 Eastern, I imagine, a couple minutes before 7 a.m. I will be live much later, around 7:45, going into the market open. So I am going to link their channels right here in the chat. They will be live for SoFi tomorrow, and then from SoFi, we're going to be going into, after SoFi, then market open. Then you got JPOW throughout the day, and then you got big tech. So it's going to be a pretty massive day. It's going to be exciting, but now we've got 4 companies that really kind of determine the trajectory of this market.
Are you doing Meta?
Yeah, I'll be doing Meta.
Okay, I'm gonna do Google. Google earning, obviously covering all, like we're of course going to cover all the names, but then because there's so many important names, I think we're going to split up and take different earnings.
Yeah, and then there's Roy's channel right there as well. All right, tomorrow will be a big one. Tomorrow will be a big one. Thank you everybody for being here. Ugly price action, not exactly what people wanted. It is the nature of investing. If you're in Seagate, Bloom Energy, congrats. Those are massive winners. And tomorrow, JPOW and the 4 biggest companies in the world will determine where the rest of this market goes. Thank you, everybody. Appreciate it. We'll see you guys tomorrow.
Bye, guys.